Good morning, everybody. Welcome to the latest edition of the Specialist Mortgage Web Show. I hope you're all well. Let's get myself sorted here. Big welcome to anyone that's here for the first time, and those of you that have attended shows in the past, welcome back. We must have done something right the last time. A little bit, if you haven't obviously been to see one of our shows before, my name's Tony Sutton. I'm the Managing Director of Specialist Financial Services Limited, and I'm your host for today. A little bit about me. I just clicked the button twice for some reason. After almost 6 years with a specialist broker, I actually started in this industry in 1983. So yes, I am that old. So I started with a lender. I was there for 5 odd years. Was headhunted by a broker. Was there for 17 months. But whilst there, met somebody who decided to set up in business with and set up my first brokerage all the way back in May '89, just before I was 26. This grew from a two-man operation from a very, very dodgy office in Wembley that was frequently being burgled. And if I remember once there was people broke in and actually cut into the walls with chainsaws to get to the petty cash tins. Yes, we did have petty cash tins in those days. And just basically that's how we started, but grew that to 140 employees and one of the largest brokerages in the country at the time by 2002. Big fallout with a business partner after 15 years. So I left in 2004, let him get on with it. He went bust 8 months later. And I went from strength to strength until after 4 years, the crash took away all my lenders. Still plenty of clients, but no lenders, unfortunately. But still here and stable in the market. Here we are, over 40 years on, still with the market, and probably will be until the day I decide to retire. My claim to fame, we always do a claim to fame. With all and it's quite difficult for me at times to do this, but because obviously we do a lot of these shows and I've only got so many claim to fames. One claim to fame I got in March 2010. I was asked to participate in I was managing a kids football team, and I was asked, all the managers were asked if they wanted to participate in this charity football match against an Arsenal 11. And I thought, yeah, why not? I'm in my latish 40s, give it a go, not played football in a while. So I decided to get myself a personal trainer, started playing football regularly, thinking I was going to be okay. And I had no idea what I was letting myself in for. The other team had a few celebrities, Tony Hadley, Ralph Little, who's a very, very good player, by the way, and a selection of ex-Arsenal players, as well as a few from their youth team. I was up front playing alongside the father of, what's his name? Walcott, I can't think of his name now. And I didn't score, unfortunately. Also didn't get man of the match. That was given to Theo Walcott's dad because he raised £200 more in sponsorship than I did, because his son sponsored him £1,000 on the morning of the game. But I was being marked by Paul Davis in the first half, and quite literally, I didn't get near the ball the whole of the half. In the second half, for those who might remember him, I was being marked by Terry Hurlock, who I tried to steer clear of completely because he was an absolute lunatic. And there's a couple of pictures of that day. There's me with Ralph Little, who was an absolutely lovely guy. And there's one with me with Luther Blissett, who was a totally miserable sod, to be honest with you. That was the only time I saw him smile all day. I absolutely did not want to be there. But we got absolutely, I think we lost 8-3 on the day. There's one other claim to fame coming up. This is a Specialist Hub claim to fame. Today is our 50th Specialist Mortgage Web Show. I'm not told the staff this, so they're probably in the background now going, oh, we didn't know that. And since June 2017, we've run now, it says almost 94. It's actually, sorry, almost 100. It's actually 94 web shows and Sutton specialist shows all around the country and virtually. And when we started these off, we were literally all over the country. Newcastle, Liverpool, Brighton, as it says there, Bristol, Southampton, all the bits in between. And then we started these in 2020 when lockdown was going on, and they've gone from, so today is our 50th. It could be quite memorable because I've got a chronic upset stomach today. So if you see me stand up and dash off and there's a blank screen, there's a blank wall in front of you, you know what's going on. So hopefully that won't happen. I'm hoping to God it doesn't happen, because that could be my claim to shame for one of the shows in the future. Our sponsor this month is Castle Trust Bank. A big thank you to them, and they're also our first speaker as well. Please remember we are depending on outsourced technology. The equipment we use, obviously we depend on the equipment we use. Our broadband, it's not going to rain today, but normally when it does rain, our broadband is effective for whatever reason. I've no idea why. The speakers broadband and where they're presenting from, that's a way. And we have tested all the speakers and they're all fine, but who knows what's going to go on. And also Microsoft don't like firms using anything other than Teams. So sometimes it can make things slightly difficult. Please bear with us. If there's any problems, we've got people in the background who are trying to sort it out. If you have a question, go to type your message box in the bottom right corner. And we will also, as always, try to get all of the questions in the time we have today. Here's a few pictures of our people, our speakers today. So Gary, Graham, Stacey and Tony. I'll come to the next slide because that shows the logos. You might recognize the logos a little bit more. So Castle Trust, Lendco, Selina, and together. And we're talking about bridging, specialist buy-to-let, second charges and commercial. That's what we're covering today. Today's objectives, obviously to help you get a detailed product knowledge, increase your product knowledge on certain areas such as specialist buy-to-let, commercial, residential second charge and bridging. I've already covered that. And also, the other reason we do these, I mean, I've always found as a broker that the help that's available to us out there from people who actually know what they're talking about is fairly limited unless you're prepared to, and even then, if you are prepared to pay for it, the help you get is just substandard to say the least. I can remember when GDPR was coming up and some of the things we've come to our seminar, it's only 1,400 quid. And you think, why on earth? Why do I have to pay this sort of money for something that is just written in gobbledygook and nobody understands anyway? So that's one of the other things we always try and do is just help you on certain areas that you might not be sure about. And all of these bits will be covered today if I actually survive the whole session. Each presentation today lasts 20 minutes and there's a 10-minute Q&A after each session. And the speakers have set themselves questions, so don't give them an easy ride. If you don't ask me questions, I have to ask the questions they've asked, and sometimes they've already covered those in their presentations. And there's no such thing as a stupid question. All I'd ask is before you click the send button, just read back what you've actually written just to make sure it makes sense. That we'll understand what you're actually asking. That's all I ask. But there is no such thing as a stupid question. Feedback and CPD. Feedback questionnaire will be available at the end of today's show. We normally hit around a third of delegates leave us feedback, which is, I mean, very thankful for that. Obviously, we want to get as much as possible because the important thing to us is knowing what we're doing right, what we're doing wrong, what you thought of the speakers, that sort of stuff, and what you want us to add into future shows. I mean, we do get people saying, can you add more compliance in? I'm not a compliance expert. I just blag it as much as I possibly can, as we probably all do at times. But we do need your feedback. So please, 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 at the end of today's show, please leave us some feedback. And you will be emailed your CPD certificate by 5:30 tomorrow. Please check your spam folder if not received before you phone us. And please don't phone us this afternoon. It's not going to be available until tomorrow. We don't just send you out a piece of paper that you have to write your name and company, and we actually do it. It looks actually it looks very professional. So please wait until tomorrow, and if you've not got it, check your spam. Commission and prop fee guide, always mention this. If you want to see our latest, and this was only changed, I think, about 10 days ago, was the last time. You can download it at the end of today's show, or you can access it from our website. That just gives you an idea of all the lenders, not every lender, for obvious reasons, but the lenders that we do a fair amount of business with, what we're able to pay you, what we receive, what we're able to pay you. So that's available to download. The other thing that's always available to download as well, I have talked about maybe shelving these, but they're still very popular. It's actually one of our most popular downloads, and I still reckon about 50% of brokers have never done anything on GDPR, so they didn't know what to do. So these are available as well. You've got your initial one that you can backdate to 2018 if you want, and then you've got your annual data protection, GDPR compliance that just complete, and one's 12 pages long, one's 6 pages long, and it's just quite simply a tick box exercise. If you were to get hacked and the ICO and the FCA get involved, they all want to see something that you actually have done something under GDPR. If you've not done anything at all, believe me, they will look to take you to the cleaners. And if they don't take you to the cleaners and you do get hacked and data stolen, then the claims management companies will probably take what you got left. And this is also very, very popular. I'm hoping that everyone can hear me, by the way, because not one person's put anything in the chat. So consumer duty, vulnerable customers. I was really struggling with this a little bit because I know what a vulnerable customer is, but sometimes knowing exactly what to do and what the regulator might want to see is a difficult one, because who knows what the regulator thinks. I don't think the regulator knows what they think sometimes. But this is something I came up with. It wasn't me coming up with something snazzy and groundbreaking. I quite simply, as I always do, copy and paste from existing documents, and we received stuff from 4 different lenders on vulnerable customers. So I just amalgamated it. for our own use, but then I thought, okay, it would be useful for people that attend our shows, no doubt. This is always one of our most popular downloads as well. So if you want that, just type in VC into the box, into the message box, and we'll get those sent out to you. And thank you for your congratulations on the 50th, Harry. But that we found that very useful, and so have my staff found that very, very useful, because they know they can see what a vulnerable customer is, but what do I do when I get one? What's the best course of action? So that's available to you. Consumer duty, I'm not talking about it. He does with a smiley face later, because I'm sick to death of it. But if you do want to learn more, then you can watch our last show that we did, our last Sutton Specialist show, which was with Robert Sinclair. One of the most popular shows we've ever run. A huge amount of delegates watching that day. And it's an hour's worth. It's available to watch on our website at any time. And of course, you get CPD for actually attending that. So give that a go. If you didn't see that, then have a look. It does tell you exactly what's going on. There's also some other stuff with the FCA as well that Robert was coming out with. And also the previous ones that he did one almost exactly a year previously, which was the first one. Then post consumer duty had to go. They're also available. So again, if you just want the CPD, have a watch. But all available on our website, as are the other three Sutton Specialists that we ran in 2023 from Family, Tuscan and Tandem, and also Scott Marshall, who was talking about volatility creates opportunity, and mainly about the economy. And that was actually the highest ranked show we've ever done as far as feedback was concerned. Again, still available to watch on our website. And remember, you get CPD for every show you watch. This month's prize draw giveaway is been kindly sponsored by Together. You have to be actually watching today's show. Well, not actually watching it, but actually on today's show for pretty much the duration. So, because around 12 o'clock, my team will come into me with a list of people who've been here for the whole time. And I then have to ask Tony Grillo from Together to pick out a number. And so if you just decide to come back at 11:45 and watch, unfortunately, you won't be entered because we can see how long you've been in the room. So just stay with us. If you're bored of listening to me speak and don't want to hear the speakers, then just leave it on mute or something and go and do something else. Entirely up to you. But if you stay with us, you do get the chance of actually winning a £100 Amazon gift voucher. And one last thing, if you are one of the 11% of authorised brokers thinking of giving it up because you've just had enough, and there are, believe me now, there are plenty, especially those that have been in the industry for a long time, give me a call. I'm now dealing and having conversations with a large amount of people who've just basically just said, do you know what, enough is enough. I've been doing this for 40 years. I've not had a complaint in God knows how long. And I'm now doing more compliance than I am selling. So just give me a call on the number there and we can have a discussion. Okay, first presentation's about to start. Get yourself comfortable. I'm absolutely delighted that I've made it through this without having to jump up and dash out of the room to the loo. So that's my one bonus so far today, but who knows, I've still got to do a little slot later on. Next presentation's about to start, as you can see, and our first speaker is Gary Maher from Castle Trust Bank. And Gary, can you hear us? Gary, oh no, he's there and he's gone. He's back. He's back. It's like a boomerang. Gary, you there? Can you hear us? You've got to turn your mic on.
You hear me?
I can hear you now. Yeah, we couldn't hear you before. Perfect. Yeah, your camera was on, but your mic wasn't.
Perfect. Well, we're all good now. I'm glad. Excellent.
Okay, we will crack on because I need to. Yeah, I need to. Right. Okay. This is so uncomfortable. Our next speaker, Gary Maher from Castle Trust Bank, the big cuddly bear, as we call him. One of the nicest guys we deal with, nicest people we deal with on a daily basis in the industry. Good fun to actually deal with, but also does know his stuff inside out. And is a big advantage to our business. You've been sent this morning their bridging product guide, which is dated 21st of May. Castle Trust basically have a number of semi-exclusive products, which we were lucky, well, not so much lucky, but we were one of the first ones to come on board with that because it was some of the products were actually designed for one of our clients in particular, which I'll cover a little bit later. A little bit about Gary. He's predominantly operated in finance sector throughout his career to date. Before joining Castle Trust, he worked as a business manager in a BMW dealership for 8 years. He is now Castle Trust Business Development Manager and has been with him for over 2 years. Gary is a Manchester United season ticket holder, although having 2 young daughters has impacted his attendance. Gary, I'm sorry for this next slide. As I always say, his claim to fame as a youngster, Gary once ran onto the pitch at Selhurst Park, Crystal Palace versus Man United, and kicked the ball back to Peter Schmeichel. He wasn't very happy. And there's actually a picture of Peter shouting at the young Gary. We couldn't get a picture of Gary in tears, unfortunately, in his little shorts and his little beard. The crowd started chanting, sign him on, but they didn't, and here we are today. So that isn't really a picture of him shouting at you, Gary, by the way. That's just a stock photograph of him shouting at everybody, as he always did. Anyway, right, we will go on straight on. I will see you in about 20 minutes, Gary. I'm going to nip off, as they say. All right, and I'll speak to you in a while.
Brilliant. Thank you very much, Tony. Appreciate it. And good morning, everyone. And thank you very much for joining us on the webinar. So I'm going to take a couple of moments to give you a run through of Castle Trust's current bridging proposition. Obviously, as Tony had mentioned, any queries or questions, we've got time at the end of the presentation for that, so do feel free to get the questions into the chat as we move through. So Castle Trust Bank, obviously bridging specialists, we are positioning ourselves as now. It's a fairly I say fairly recent, it was last February that we born out of the gruesome twosome, Liz Trust and her friend Kwasi Kwarteng, having a mess around with base rates and things of that nature. We found that bridging was the route for us to is it's the best time to pivot and make sure that we are available and try and establish ourselves as a bridging lender and a genuine option for you and your clients. We have subsequently won Best Bridging Newcomer at the BENCs last year and have been nominated for Best Bridging Lender this year as well. So hopefully that gives some indication of how we are progressing on that front. So what we want to achieve today is obviously by the end of the presentation, just create an understanding for you as to where Castle Trust sits in the bridging marketplace, highlight some key hotspots where we're seeing a lot of traction currently, and where potentially you and your clients could see the benefits also, and just to make sure that Castle Trust is in the forefront of your mind as a genuine option for your clients when it comes to all things bridging. So a bit of a general slide to begin with. Who do we lend to? So it's quite a broad brush in terms of who we lend to. So limited companies, foreign nationals and expats is something that we've always hung our hat on, but we continue to lend to foreign nationals and expats. First-time landlords, first-time buyers we will consider as long as they're buying in a limited company name and are UK-based and UK nationals. And importantly, we do not have, as a lender, a minimum income requirement. So I think it's a good idea to highlight that. We must be comfortable that there is an income, but we don't have a minimum income requirement. So when it comes to bridging, we're not going to be asking when it comes to the underwrite up front for bank statements and things of that nature. So as long as we can be satisfied that there is an income, then we are good to go. So in the bridging space, so some of the key points, obviously we have or key highlights for us, which we'll touch on in a bit more depth as we work through the presentation. So we're able to lend 80% net on light and heavy refurbishments. That's 80% with interest on top. So the client walks away with 80%. That's, as you can imagine, something that I'm more than happy to, in any broker's office, stand on a table and just shout 80% net, because that certainly is something that puts us right at the forefront of what we're able to lend. We're able to lend 75% net on heavy cases if planning is required but not yet in place. We can offer up to 100% of drawdowns as long as the LTGDV is within 70%. We have no arrangement fee or admin fees on drawdowns. Obviously, we'll touch on that particular product in a bit more depth shortly. Minimum loan size is, loan size is from 200 grand upwards, up to 5 million, without having to present to a sort of credit board. We have rolled interest. The majority of our products are rolled interest, but we do have a serviced bridge option as well, which we'll touch on in a second. Terms between 6 and up to 18 months. Importantly, There's no ERCs on our bridging products. There is a minimum interest charge of 3 months, but when the client comes to exit for whatever reason, be it either refinancing or sale or whatever, there would be no early redemption charge for them. What we do as a rule is when a case comes into us, we do underwrite it day one. So we're not going to wait until the 11th hour to finally have the case underwritten and then potentially issues arise. When a case comes into us, we will underwrite it day one, so that when we're issuing either a LID, so a loan illustration document, or an offer, that is credit backed. So there's some comfort there for yourselves and your clients to know that we have underwritten it. We're comfortable with the client and the borrowing entity. Then obviously the next hurdle, for want of a better term, is obviously the valuation. So we're keen to obviously instill as much comfort as we possibly can. We do look to use and utilise title insurance wherever possible, again, to speed up the process from where most time seems to be lost in my experience, and I'm sure you'll concur, in the legal side of things, which is kind of out of everyone's hands. But if we're able to utilise title insurance and obviously forgo having to do various searches at the legal stage, then obviously more's the better, and we'll continue to do that. When a case comes into us, the documents that we require up front are quite simply an ID, proof of address, and if it's a refurbishment bridge, a schedule of works. So as long as we can get those added to the case as soon as they come in, the underwrite can commence, and hopefully we're all laughing, and obviously a much as streamlined a process as we can possibly have. So I'm going to touch on individually the products that make up our bridging portfolio. Now, what I will say up front is that we do not want to overly complicate anything. So we want to make products as easy to understand as possible for two reasons for that, really. Is obviously to make sure that it's easy for you guys to grasp, but then ultimately you have to communicate the intricacies of the product to the client. So we want to make sure that it is as easy to understand, as straightforward as possible. So all the communication on what is required and what the product is and does is easily communicated to all parties. So the first product we have is our standard bridge. Now, this primarily would be used in our experience for auction purchases and development exit. So what we're able to do here is we're able to lend up to 75% gross day one. Now, that is including the arrangement fee and any rolled interest. So it's actually going to net down to about 67-ish% net day one for the client. Terms between 6 and up to 12 months. Rolled interest, and this will become a bit of a theme. No ERCs, minimum interest payments, or minimum interest charge would be 3 months. Loan terms, the minimum lend is 200,000, and we can lend up to 5 million. Anything above 5 million, we will certainly still consider would be subject to potential bespoke pricing and presentation to credit board. Now, we have recently introduced a stepped pricing. So you'll notice, obviously, up to 75%, between 65 and 75 now, is priced at 0.85. But if we're looking at a lend that is up to and below 65% LTV, then it would now be priced at a reduced rate of 0.75%. So, best example or a bit of a case study here is how the standard bridge was used in a development exit scenario. So had a limited company applicant who was an experienced developer. They had created a 14 unit multi-unit block in Norfolk. The purchase price there, or the valuation, is 1.425 million. We're able to provide a lend of £965,244 to be precise, which is 75% gross, including the obviously rolled interest on there, which was able to be used to pay off their development finance, and also have the flexibility that during the term, obviously developers often, they've got developed 14 units, they're not sure what they want to keep and what they want to sell. So we lent again all 14. The client actually sold 6 during the term of the lend, which we are comfortable with them doing and paying down the lend with the proceeds of that sale. Obviously there's no ERCs there, so they wouldn't be penalised with an additional charge for paying that down. And then obviously at the end of the term, they can look to exit with whatever units they have left to the wider market. The newest addition to the bridging portfolio is our service bridge product. Now, this is probably the best example of how we are, via broker feedback, looking to continually tweak and develop our portfolio of products. So the service bridge it's a bit of a niche product in that the best scenario where this works is for your first time HMO, someone who's developed a property into an HMO. It's their first project. So it might be a HMO, it might be a multi-unit block that they intend to let out, it might be a holiday let where this works as quite well also. Now, because of the lack of history behind them, when they obviously they've done the development, when they're looking to term out and exit their funding, maybe their development funding, the market that is available to them in terms of term lenders, because of that lack of history, might be quite condensed. So there might be maybe let's say 3 or 4 options available to them in terms of where they can exit. Obviously, with rates being where they are at the moment as well, they might be loath to commit to longer term 2, 3 or 5 year lending on rates that where they currently are. So what we have here is a service bridge. It's a 12 month, up to 12 months would be the maximum term here. So what we would suggest is that you could position this as we refer to it as bridge the gap. So it is an opportunity to park the existing lending for up to 12 months, because if you could look at this as a 12-month buy-to-let option that the client is able to exit at any point should they wish to. So the rate on the product is 0.52% per month. That equates to up to 6.24% if you're looking at it annually. Minimum lend would be 200,000 and up to 5 million. This is the only product we offer which is serviced in terms of the interest. So there's a monthly direct debit there where they are servicing the interest. Now, what we are finding is that if the client has taken advantage of this, obviously we need if it is a new project, we would need to, if in an ideal world the development would be completely let prior to completion. If it's not, then we can, as long as we can evidence that the first 3 months, we have a bank statement or whatnot of the first 3 months rent or direct debits can be covered, it gives them the opportunity to get the property let. Then we're happy to plough on and move forward with that. But what we are looking to achieve is that 12 months down the line, where the client has 12 months of history behind them, be it an HMO, multi-unit block, or a holiday let is where it has worked very well in the recent past. When they come to exit the bridge, the market for potential exits in the buy-to-let market is a lot wider. So, for example, building societies, for example, once will come into the market once they have that history behind them, or being able to, or history of letting on their new development. Sorry, so it is quite niche in terms of what the product does, but it definitely has, if it ticks the right boxes and the scenario that you find your client in, it can be very, very beneficial. So moving on to, this is really the jewels in our crown, really, are our refurbishment bridges. Now, we have 2 sister products, which are light and heavy refurbishment. So a question that is often asked is, what is the difference between light and heavy refurbishment as far as Castle Trust are concerned? Now, the answer is planning required? So if planning of any type is required for the works, it would be heavy. If planning isn't required and works can be done under permitted development, it would be light. So light refurbishment, as said there, works that fall under permitted development, typically residential to HMO conversions with up to 6 tenants, which can often be done under permitted development, replacement windows, kitchens, heating, bathrooms, and general sort of tarting the, for want of a better term, tarting the security up, and internal reconfiguration. Heavy refurbishment, as you would expect with that requirement for planning, would be more of the larger or heavy cases in terms of the works that are going on. But conversions into sort of large HMOs and multi-unit blocks, conversions of houses to flats, office to or commercial to residential conversions, and structural works is what would fit on there. Now, so light refurbishment, so the first of the two, do two very specific things, but are very similar in their layout. So we are able to lend up to 80% net LTV day one for your client on this product. We have a 75% LTGDV requirement at the back end, terms between 6 and up to 12 months, rolled interest, and again, no ERCs. We have implemented here a lower rate. So typically your rate would be up to 80% would be at 0.85%. But if the lend is 65% LTV or below, the rate would be 0.75%. We also have a special offer, which is available via Specialist Hub, that if a case comes in on this product today, again, lending up to 80% net, if it comes in and completes by the end of July this year, we will reduce that rate from 0.85 to 0.80. So a bit of a carrot there to get the cases in and obviously hopefully make sure that your clients benefit. With a case study on the light refurbishment product, a detached property in Devon, need of a full refurb, so a full refurb being all light works, new kitchen, bathroom, and the creation of an ensuite. This was to be used as a holiday let. So we were able to, the purchase price was 260,000. We're able to lend 212,680, so 80% net at day one, and that fitted within the LTGDV constraints with the rolled interest there. That GDV being 320,000. So what we teaching anyone to suck eggs, but at the back end, when we're looking at the LTGDV, it's the day one lend plus the rolled interest. That figure needs to be within 75% of the GDV. This also, and this is the most typical case that we will see on light refurbishment, is a conversion to HMO. So in this example, it's a 5-bed terrace in West London, bit of light refurbishment and conversion into a 6-bed HMO. So no planning was required, as it's not in an Article 4 area. So it was all the works were under permitted development. Purchase price was 1.83 million with a GDV of 2.5. Again, we were able to lend 80% net day one for the client, and working off of obviously the post works rental there, we're able to evidence that a term exit would work. As it's something that we do require from an underwriting point of view, although we do accept a sale exit, we do need to be able to evidence that a term exit would work. So that's why we would, as mentioned here, post works rental, and that's why we would ask for what that is. So we actually work the exit on or the term exit affordability on a pay rate of 5.5, so it's not necessarily our buy to let rate, and then on the appropriate ICR, so if it's HMO it would be 145%, multi-unit blocks and limited company purchases would be 125%, but we will do that at the outset when we're looking at issuing terms for you. Heavy refurbishment, again, is the older sister, shall we say. Again, up to 80% net, 75% LTGDV, Terms wise, we can do anything from 9 and up to 18 months, 18 months term on this product. Rolled interest, no ERCs, and obviously pricing up to 5 million. Anything above 5 million would need me to present to board. Now there is, and this is evidence of our flexibility as a lender. You'll notice here, if planning permission is in place day one, then we can lend up to 80% net, and we crack on, happy days, and move forward. If planning isn't in place, but everywhere all parties are satisfied that the wheels are in motion, and it's going to be obtained, we can look to pivot to cap the lend to 75% net. We would insist on an 18-month term, but it would allow the client 6 months to get the planning in place, and then a further 12 months for the works to be carried out. So it's just an example of how we are, based on client feedback, broker feedback, most importantly, we're able to sort of pivot and be comfortable and make that's something that we can offer. Rate wise, again, we've added in a stepped lower rate. So rate wise, between 65% and 80% LTV net, we're priced at 0.95. 65% and below LTV, we'd be priced at 0.8 now on this product. We do have the same special offer via Specialist Hub, that if a heavy refurbishment case comes into us at 80% net, we will, as long as the case comes in this month and completes by the end of next month, we will reduce that rate from 0.95 to 0.90. So we also have, and this is, I'm getting bored of saying it myself, but the whole portfolio that we offer is born out of broker feedback. So historically, we've been able to lend 80% net, or had been able to lend 80% net towards the purchase. But the question would then be, oh, do you lend towards the works? Which historically has always been no. However, with this product, we are now able to lend towards the works to be carried out on the security. So this is our heavy refurbishment with drawdowns, which doesn't have, it's not the most catchy name, but it does what it says on the tin. So we can lend on this product. Well, I was going to say, planning permission must be in place to be able to use this product. Be that on a property that is residential and is being turned into another residential entity, or a commercial property which has change of use in place to be turned into residential. This would fit on here as well. We can lend up to 75% net day one. And again, that's net figures. And then additionally, we can lend up to £1 million worth of drawdowns, over a maximum of 5 drawdowns, towards the works. So this is definitely the first scenario we're able to say, yes, we will do the works as well for you. So we need to be within 70% LTGDV at the back end on this product. 18-month term only, rolled interest, again, no ERCs. However, the only subtle difference here is that the minimum day one lend is £250,000 on this product, whereas as opposed to 200,000 for the other products. Just some case studies for the heavy refurbishment. We had a 1-bed flat in Notting Hill, which was converted into a 2-bed flat. Purchase price was 1.375. It was all under permitted development. We were able to lend 75% net on day one and 100% of the works. So obviously, with this product, we forgot to mention, we will use an IMS to go out with, particularly for the work. So an IMS will do an initial visit, and then subsequently for each drawdown, an IMS will go out to assess the works that have been carried out, and that they tally up with the amount that's being claimed for. Again, same product, but this time on a holiday let. 5-bed detached farmhouse with 2 acres of land in Chichester to be used as a holiday let. We were able to refurbish this product using 80% net LTV. So it didn't need the works to be covered. So we just did this straight on our 80% light refurbishment bridge. We were able to then exit via the service bridge that we had talked about. So giving the client that opportunity to build up 12 months worth of lettings history to then look to exit to the wider market. With ourselves, just a quick one on our solicitor panel. So we are able to offer dual rep via Paris Smith, but we also have Brightstone Law and Lightfoot would be sole reps options for your clients as well. I just noticed Tony has just appeared there, so that must mean I'm running out of time. But conveniently, it's very well timed, and this moves us into if you guys have any questions or queries.
We have one very good question from Paul, which is, do you insist on a fixed and floating debenture for bridging loans to limited companies? If so, would you decline if existing lenders, other properties owned by the same limited company with a negative pledge, do not give their permission?
We would insist on we would insist on a debenture. So if other companies were involved with a negative pledge, if they don't give their permission, then we wouldn't be able to proceed with that.
Okay. Someone is typing, good presentation, or great presentation, by the way, Gary. Sorry, I forgot to, my brain's someone's typing. I was going to ask probably one of the easier questions you set yourself. Can Castle Trust lend on commercial properties?
We can. So fundamentally, we are a residential security lender. However, this one scenario where we can lend on a commercial property is if it has a change of usage and planning permission to be turned into residential. So this would be via one of our refurbishment bridges, be it the standard heavy refurb or the heavy refurb with drawdowns, where as long as planning permission, it has to be in place. As long as that is, and the intention is to, and we see plans, etc., for what it is to be turned into, and it's to be fully residential, then yes, we can. That's the only scenario where we can lend on commercial properties.
Okay, and that person's still typing. So what is Castle Trust minimum income requirement?
So as I mentioned in the presentation there, we don't have a minimum income requirement. So as long as we are satisfied that there is an income, then we're good to go. That ticks the box for us. From an underwriting point of view, on bridging, we're never going to just ask for upfront for bank statements. It's not. We don't need that. And it's one of the, just another thing to slow the process down potentially. So if we can be satisfied with the background searches and whatnot that we will do as part of the underwrite, that there is an income there, then we're good to go. So we don't have a minimum income requirement as such.
Okay. Harry has asked, a mixed use property, shop with 2 flats above, planning for a further 2 flats, can you lend?
So mixed use is if it's to still remain mixed use after works, then no. We can look at lending on the residential elements if the client was willing to split the title there. So if it's mixed use and intends to be fully residential afterwards, then yes. If not, then we would need to split the titles.
Okay. And George has asked, please advise what procuration fee is paid on these products. I can answer that if you wish.
Go on, Tony, I'll leave that to you.
Because Castle Trust do have a very limited panel. The reason for that is they can't deal with like hundreds and hundreds of brokers, quite simply because they haven't got the capacity. They want their people to be able to concentrate on getting the cases through. And their staff are, I must admit, probably, when I've spoken to underwriters, when I've spoken to the people who actually sign cases off, they're as good as I've come across. So what they don't want is to get sort of like jammed with business that sometimes might not be going anywhere. So they have chosen, certainly for their semi-exclusive products, there is a very restricted number of brokers who've got those. So depends on whether you package or whether we give the advice. So what I'd say, George, is download our prop fee guide that I mentioned earlier on, and that's available on our website, and that'll tell you exactly what we receive and what you would receive. Is probably the best bet. Kieran has said, good presentation. Andy has said, is there an exit fee?
There is no exit fee on our bridging.
Fine. Okay. And there's one other person type, which we'll make the last question because we're then at the end of your bit. I need to get the next speaker on. and so hopefully their typing's faster than mine, because
waiting with bated breath here.
Yes,
No pressure.
Yeah. So the other questions you set yourself, Gary, you've actually already answered. So I didn't want to cover those again. So, is it coming? Is it coming? Is it coming? There you go, Kieran. Okay, there is. Kieran, is there any charge if a client wants to buy a second UK residence when they have a first residence abroad?
Is there any charge? Well, we don't lend on the main residence. So just to answer that first, it wouldn't be something that we could lend upon. But if they, not quite sure I understand the question, you've stumped me.
Okay, I'm not sure. Maybe charge should be chance. Maybe. So, is there any chance if a client wants to? I think, in essence, if security is a UK residence, Castle Trust is purely non-regulated. They don't do anything that's regulated. I don't do consumer buy-to-let.
Correct.
Quite simply. And you've got another well done, good presentation. Right, Gary, fantastic as always. I will speak to you probably about 2 minutes past 1 o'clock on a number of cases. I'll give you an example. I'll very quickly give you a quick example. We've had a client come to us. It's actually somebody I met in the gym who's a property developer who was looking to buy a property and had been to a large number of other brokers and had got as far as actually getting a valuation done by one of them. And every single broker turned her down. All because none of them had access to Castle Trust product. We have just had the case offered because we're able to work on net LTV rather than gross, and it actually gives her enough to actually get the job done. So we've just had that offered, and as I say, if those brokers had actually used us or partnered with us, they would have had a deal by now. And she has literally been through probably well over 10 brokers, and each one has turned her down. So there you go. That's the difference sometimes between, if you've got a lender like this, you can get business through. You just can't get through elsewhere. And this is a fairly unique product. Gary, thank you as always. Marvellous.
My pleasure.
And I say I'll speak to you about 2 minutes past 1. We will now crack on with our next speaker, who is in the room because I've just checked. I've had to undo my tie because I'm feeling a bit hot and sweaty. And here we go. So our next speaker is Graham Palmer from Lendco, and I always tend to speak slowly until they appear in the room, just in case there's any issues. I don't want to shoot through it and then find out that we're having technical issues. Here he is. Graham, can you hear us?
I can. Can you hear me, Tony?
Fabulous. Absolutely loud and clear. Actually, yeah, very good. So, okay. For some reason now the slides have stopped working. There you go. There it is. You should have received this morning, which is Lendco's buy-to-let product guide. I did some years ago say that Lendco were the best lender you've never heard of. And I don't know whether I was the first to say that, but they started actually using that as a strapline at one stage. So if it was me that was the first, then I'm waiting on the royalties. I've had nothing at all.
I'll inquire with the upper senior managers about that for you later.
Yeah, please, if you would. Please, if you would. So a bit about Graham. He's been at Lendco since April 21, previously a mortgage advisor and broker in both the regulated and unregulated markets. Graham has a great picture of what's important on both sides of the fence. Graham started in the world of mortgages. I don't know why that just happened. I didn't click anything. Let's try that again. Okay. Graham started in the world of mortgages as an advisor for Lloyds Bank back in 2015. He found himself in the intermediary market a few years later. This is where he started to fully appreciate the importance of a quick and accessible BDM and strives to be just that. Outside of work, Graham enjoys spending time with his family, and friends, and attempts to squeeze in the odd game of golf at the weekend. Although we'll admit that since his 3-year-old turned up, his handicap has gone the same way. I presume your 3-year-old just didn't turn up on your doorstep as a 3-year-old. That's a baby you've had who's now 3.
Yeah, she did turn up as a baby initially. So yeah.
Fine, okay. Just want to clarify that because I just had this picture of someone standing at your doorstep, 3 years old, nicking your golf clubs, maybe.
No.
And again, I don't know why. Yesterday I was a bit bored, so I decided to put pictures up of all the things. So Graham once found himself in a position where he was backstage at a festival, raving away with the Chuckle Brothers from a historical BBC children's show, Chuckle Vision. That's right, the To Me, To You chaps. And there's the only picture I could get of the Chuckle Brothers looking like they were raving.
It's a good one.
All the others were drinking tea. So, Graham, over to you. I will see you in 20 minutes. Good luck.
Thank you, Tony. Thank you very much. Thank you. Yeah, so good morning, everybody. And firstly, thanks very much to Tony and the team for having us in this morning as well. It's always good to come and say hello to you guys. So Lendco, as Tony's already mentioned, the strat line we were going with at one point was the best lender you've never heard of. Whether or not that's actually true anymore, we've thankfully grown quite substantially in the last few years. So maybe it's the best lender you might have heard of. Maybe we can change it to that now. So, but our forte is common sense lending. Trying our best to look at every single case at its own individual merits, and maybe the ones that don't quite fit the mold in normal cases. If there's a plausible explanation behind things, or if there's a legitimately good business reason to be doing it, but it doesn't quite fit the mold or tick the boxes in other lenders, then that's kind of where we step in quite well. So that's our niche there. We specialise in buy-to-let and bridging. Obviously today is going to be about the buy-to-let side, and from our side of things, we were established back in 2018, so we were up and running a little while ago now. To which we've done over £1.5 billion worth of completions in business since. So we like to think we know what we're doing, even if maybe you haven't heard of us just yet. So key things that we're really strong at the moment. One of the key parts there is actually our lending entities that we can support. First one's obviously limited companies there. So we do quite a wide range when it comes to sort of the types of limited companies we can support. SPVs, trading companies, LLPs, trusts, all absolutely fine with ourselves. Key points on some of those: SPVs don't have to have certain SIC codes or have been running for a set period of time. We got a lot of cases actually come in where they're actually in the process of opening up the limited company at that time. So that's absolutely fine with ourselves. And trading companies, we're absolutely fine with those as long as they're in good stead as well. So that's another key point there. As long as they're up to date with their books and it's been up and running for the last couple of years at least, we're fine with putting the business through those kind of cases. LLP and trusts are obviously a little bit more specialist there. So they're ones that we do on a case-by-case basis. We have recently put a little bit of a buffer onto our trusts. So really, cases of £500,000 and upwards are key for us on that one now. The only restriction behind that is just because sometimes the amount of work and the amount of beneficiaries and so forth that are in there to do due diligence on can take forever and a day. So I'll be honest, that's something that the team have come up against as a bit of a time saver for us. So £500,000 is what we're looking at as a minimum loan size there. We stress at 125% in most cases, and that's on all limited companies for a start, and for personal named clients as well, who are lower rate UK taxpayers. So that's the key thing there. The only difference to that would be our PD conversion schemes. We stress at 150 for that in all cases, and 135% if it's a medium or large HMO. So again, slightly more specialty properties there do come with a slightly stronger stress on that. So maximum of 6 borrowers and shareholders are permitted on the application. I'm afraid to say the system will allow you to put in 4 there. So just give me a call, or one of the guys on the team a quick call if you have got 6 directors that need to go on there. In some cases, what we might do is, if a couple of the named applicants are really not going to bring anything to the table with regards to experience or PGs, etc., what we might do is we might say actually they don't have to go into the deal. In other cases, we might want them on there, and therefore there's a manual form we can get set up and sent out for you if need to be at that point. So, and we're also very comfortable with regards to layered companies and structures as well. So obviously you might have your initial SPV with a couple of subsidiary companies behind that for your more in-depth portfolio guys. And we're absolutely fine in that situation. We will want to get to the bottom of making sure we understand who the directors are, even up to the upper companies as well. So if you do find yourself in the 3rd or 4th subsidiary account, just be prepared that we might ask some due diligence questions and basic ID&V and so forth on the guys above that as well. So types of clientele that we can lend to also cover, of course, expats and foreign nationals. So for ourselves here, we're very, very strong when it comes to expats. Reason being, of course, we can actually pretty much lend to most places in the world. So if you've got a UK client, UK passport, might have left for work reasons, etc., or whatever it might be, we're in a position where we can lend up to 75% to those guys. And as I said before, really, they can be anywhere in the world. Key things for us on these cases, of course, are normally source of wealth and just getting to understand, where they got their money from, what their day-to-day job looks like, and so forth. And there are also a couple of additional restrictions along the lines of there is a minimum income requirement for these guys. So we have no minimum income requirement for UK nationals, but we do when it comes to foreign nationals and expats. And that is the £75,000 equivalent of per annum, effectively there. That's the same for self-employed and employed clients. So it doesn't matter to us which way around they are, as long as we can get that sort of income proof there. Expats and foreign nationals, it says up to 75% there. To be fair, foreign nationals for us are 65%. So expats are 75% though. So if you've got a foreign national that's from one of those countries you can see on the screen just in front of you there, so it covers the entirety of the EU. Australia is a pretty good one that some other lenders don't always like to cover. China, Hong Kong, India, South Africa, Singapore, a few other ones again there which are a little bit more specialist. those guys and girls, we can cover them up to 65% LTV. We won't do first-time buyer, first-time landlords into the UK. So that's quite important to note there. And we will be in a position, of course, where we need to make sure they've got an established credit history over here. So really, we would prefer them to have one property over here that's been let out for 12 months as a minimum. But we have made exceptional circumstances if obviously you've got a high net worth client who's got buy-to-let experience abroad as well. So really, with those kind of cases that don't quite fit the mold there, just give us a quick call and we'll obviously run through that with you and see if there's some scope to help. So ID and proof obviously is going to be required from all these guys and girls, of course, as well. So we do ask that they're signed by a notary in that situation, or a solicitor. And that allows us obviously to get comfortable with the ID and V from that side. And currency restrictions, there are none. So that also makes it nice and easy dealing with these guys and girls, because again, we're in a position where it doesn't really matter where they're based and obviously what their income is. We're in a position where we can take into consideration. Maximum loan is up to 3 million at 65% LTV and 2 million at 75% LTV. Now, that's not just for expats and foreign nationals. That's pretty standard across the board for us as well. So from our side of things, we're in a position where, although we don't have maximums when it comes to, well, sorry, that's not strictly true. We have maximums for clients with their initial sort of case dealings with us, for instance. But we'll be in a position where we can go up to 10 million for a client. Just the maximum on a single asset loan, for instance, there would be potentially 2 million or 3 million, depending on the deal type. So yeah, 10 million is the aggregated amount, as it just says underneath there for you. And foreign nationals can be residents or non-residents as well in the UK. But as I mentioned already, we've got to have some sort of experience into the UK as it is to begin with. So, okay. Accessible asset types. So asset types that we can deal with, quite a large range actually for us. And some of our specialty areas that we work best in is when it comes to things like HMOs and multi-units as well. So these are some of just the key points on that. HMOs are up to 20 bedrooms, which is something that's new from anybody that joined in the school last year. We used to go up to a maximum of 12 beds, but that's been extended up to 20 now. We've got 3 different ranges when it comes to HMOs: small, medium, and large. Medium is 7 to 12 bedrooms, and large is 13 to 20. And for us, it is quite critical they do have existing HMO experience as well. So we'd expect to see them already have that on the books and with that kind of background day-to-day running of them. So small HMOs, again, if they should have buy-to-let experience as a minimum for us. So we don't really do first-time landlords at HMOs either. There has been the odd occasion we've looked at it if we can consider they're a very, very strong client and with regards to sort of incomes, etc. And also maybe they're managing companies in place as well. So again, just one of those, if you've got a small HMO, then just give us a quick call and see if we can help out there. Flats and houses above and adjacent to commercial. So that's at 65% LTV caps on all sort of commercial cases like that. But for us, obviously, a lot of it comes down to values commentary. As long as they're okay with it, we're okay with it too. And again, there is potential room for that to be moved up a little bit in LTVs if it's not your traditional sort of high street or, you know, like a parade of shops you've got commercial above or next door to. So yeah, in that situation, really, just give us a quick call again. If you've got a prime example of this would be one I had actually a few weeks ago, which was an oldie worldy sort of town that we've got down here in the south. They've got a bookstore which is actually just below a row of flats, and to be honest with yourself, unless you knew it was a bookstore, you wouldn't know, if you know what I mean by that. So the outside of it looks just like a normal property, and in those situations we have gone up to higher LTVs. So there's no limit when it comes to sort of the multi-unit side of things for us. So again, the strength of our 20-bed HMOs are even stronger on multi-units because we don't have that cap there. So we do look at significantly larger units, both on a multi-unit freehold and on a leasehold basis as well. Now, again, that will come down to appetite more than anything else for ourselves. So really, those kind of cases, we will take to what we call our credit forum every single day. Any cases that don't quite fit the mold that I've been discussing will be ones that we take to our directors and also to our head of underwriting, head of risk, etc. as well. And just to really get a feel whether or not we've got the appetite for those kind of cases and how we can make it work. The good news is, obviously, in most of those cases, unless something horrendous happens with the valuation, we're in a position where we're always on at that, of course, as well. So we're in a scenario there where you'll get an answer from us within 24 hours about these kind of quirky cases. And, you know, you'll have sort of full commitment and full sort of confidence to move forwards with us to say that we will be able to get the job done for you as well. So when it comes to large multi-units, that's something that we do on a day in, day out basis, run it past the guys. And a lot of things are going to come down to the experience of the client. You know, bit of curb appeal about the unit itself. You know, if it's a PD scheme, for instance, that hasn't really been changed externally, you might find that it doesn't get quite as much love as a brand new built purpose-built multi-unit in the middle of London, for instance, which is made to look glorious. So that could be the difference there between the actual units themselves. And of course, obviously the LTV that they're asking for as well. So although we can go up to 70-75% on those kind of cases, generally around the 65-70% mark is where we work best on those for you. We can also accept ex-local authority properties as well. So that does include deck access, does include, as I mentioned there, ex-local authority properties. We won't do them if they don't have a high enough level of private ownership in the buildings, of course, as well. So if it's kind of all tenanted and it's all investor-led, although we don't have a policy technically in place on that side of things, if the valuer does come back and tell us it's investor-led, we're in a position where unfortunately we would have to politely say no to it. So again, a little bit more case by case, and we just strongly recommend you pick the phone up to myself or one of the guys in the team that can support you with that as well. But yeah, we can do that for ex-local authority properties as well. No problems at all. So the types of products that we've got available at the moment, yeah, from our side of things as it currently stands, we've got 2-year trackers available, 2- and 5-year fixes, our interest-only option when it comes to all of our products, of course, and the bridge exit as well there. So the bridge exits are one for our own internal bridges only. So if you have done a bridge at a third-party company or other lender, of course, I'm afraid to say you wouldn't be eligible for the bridge exits in-house here. But obviously, as I did mention at the beginning, and not to relay too much on the bridging side, we do offer that facility. So obviously, we can do the bridge to let side of things there, no problems at all. The 2-year trackers for us at the moment, obviously with the market still being a little bit up and down, you know, we're seeing some sort of mixed usage on that side of things. But the 2 and 5 years, obviously people just want that sort of, you know, just that kind of peace of mind to know that they know what they're going to be paying for a little while at the moment. So to try and ease that, you know, 2-year stresses for us at the moment are really, really good. What we've done here is we've actually got pay rate plus 1% for anything that's just a straight pound for pound refinance, or pay rate plus 1.5 if it's for a purchase or capital raising. So that's really, really strong out there at the moment. And our 5-year fixes are just standardly pay rate plus obviously the arrangement fee, of course, as well. Now that's obviously just varied. So we've actually, you'll notice if you have a look at our rate sheet that we issued out a little bit earlier on, you'll see on there that we've got a different range, 3 or 4 products in most cases. And the only difference is the interest rate versus the actual application fee, of course, as well. So and that just allows us to kind of play the ICR game a little bit there and try and support your clients where it's the right thing to do, of course, as well. We also offer PTs as well. It's another key point for us at the moment. PTs currently in place. It's not what I class as a traditional PT. We're not one that just flicks the switch and gets a brand new deal in that afternoon and it's all done and dusted. Because of the way we're funded and the way we're set up, we do have to issue all new loans as brand new loans. So we will help out with things like AVMs at that point. So there'll be no valuation fees for the standard assets. And also there'll be no legal fees and so forth as well. So that makes it a little bit quicker and slicker for that reason and cheaper. But we're in a position where effectively we are trying to retain as much business as we can do. So some of these deals that weren't quite working on pay rates and so forth as per normal at the moment, we've had some other levers that we can pull in-house and try and work on them. You know, we've already got the deal with us. So, you know, we want to try and retain that client's business. So, yeah, with regards to that, though, the product range is the product range. So, you know, if it's PT or if it's a brand new bit of business, it's still the same product range you're looking at there effectively. Okay. Just moving to the next one. So loans and applications. So for us, one of our key USPs at the moment is that everything we do is completely manually underwritten, which is great because that's where you get the common sense factor from. That allows our underwriters to sit there, look at each case in its own merit, and you guys have full access to them as well. So we do, and we are happy to issue out, you know, names and numbers of the underwriters and the case managers you're dealing with on a day-to-day basis. Just allows you to, you know, if there's a bit of a miscommunication between a particular type of document or something, the way something's been worded, for instance, instead of a 2 or 3 hour email correspondence that goes backwards and forwards, you know, just pick the phone up, have a quick chat with them, explain what's going on, and then everything's all ironed out nice and easy. So, and again, same scenario for us as well. We can pass on the same messages in-house. So feel free to give the BDMs a shout about anything like that at all as well. For our side of things, the credit back decisions that we make within 24 hours is what I mentioned earlier on. That's where it goes to our head of credit and head of underwriting and our directors, etc., to have a look at those kind of slightly more unusual cases. And it just, again, gives you that peace of mind to know what you're going to be doing from day dot, really, and that you know that we're going to be able to support it. So maximum loan per asset is 3 million, which is already covered off with an aggregate of 10 million. That's a scenario where that's probably not going to change anytime soon, if I'm honest with yourself. But we have been in a position where, again, we have had certain units and certain types of deals, obviously, in a situation where we've been able to do a little bit more on those if we're able to split titles, because that's on individual loans, that 3 million. So again, you've got a large multi-unit that they want to do a little bit more on. Again, give us a quick call. We can help you with options that the client might have to restructure that. So And top slicing is something else that we offer as well, of course. So we only tend to do this for UK nationals in the UK. So really expats, we can do it. Foreign nationals, we can do it, but we tend to try not to, just from a risk point of view. But again, you've got a really strong client. They're just not quite getting across the line with the sort of the standard rentals they're getting. But, they might have a smashing portfolio in the background or a very significant wealth for the income as well. We're in a position where we can support them in that situation. So again, just another option to pick the phone up to us and have a chat, really. So useful information. So I always provide the applicants full information to Specialist Hub, submit those proofs promptly, ensure to obviously not provide documents that haven't been requested. And I always say this to about any lender generally, because I'm pretty sure they're all in the same scenario where they will have to review everything. So if you send them over 10 years worth of bank statements, but they only asked for 3 months, then they will read through 10 years worth of bank statements. So, don't give them more work to do, and also ask more questions on sometimes. So source of wealth is always going to be required as well, especially on the expat and foreign national cases. We do have templates and so forth, which we can support you with that. So that's all via the website as well. We have a useful documentation part on the website, which allows you to go on there and download things like portfolios and so forth as well. And proof of name and address is going to be required in all applications that are going to be certified. As I mentioned earlier, notaries, solicitors will support us in those situations as well. And prior to completion being submitted, obviously just make sure that the current structure is up to date, the company's house. So that's always a key one, because we tend to find there's a lot of times where we're going through it and we're taking off, obviously, certain shareholders, or we're adding on certain directors, for instance, as well. And, it just makes it a little bit more time consuming for you guys, really, if we don't know what the full picture is from day one. Now, we're very happy if the case hasn't had a chance, the SPV hasn't had a chance to be updated, for instance, there. Just give us a quick call and let us know what's going on, and we can make sure we get that. There are also note sections in all the applications as well. So again, that'll leave a little bit of time there as well. So brilliant. And that, from a Lendco point of view, is that really. So
there's any questions, and bang on time, Graham, as well. Thank you for that. Very good. I missed part of that, unfortunately. Forgive me if any questions have been already answered in your presentation. Marcel has asked, Qatar, UAE considered? He hasn't said whether it's foreign national or an expat.
No, that's fine. I'm afraid to say from a foreign national point of view, I'm afraid not just yet. No, the Middle East area and South America are 2 areas where we haven't had any sort of sign off in those particular regions just yet. But from a expat point of view, that'd be absolutely fine. So again, we would look at those cases on a day-to-day basis. We've done a lot of lending to guys and girls who've moved to Dubai, etc. as well. So expat, yes. Foreign national, no.
Okay, Steve asked this question, but literally as it came up, you answered most of it. So, okay. Do you do product transfers on buy-to-lets? If you do, what are the lender arrangement fees? Steve, probably best to refer to because there's lots of different plans with Lendco. Refer to the product guide we sent you this morning, and that will give you an idea. And Pierre just said he just asked a staff member to check Trigold, and Lendco isn't on there. Is this correct? I've never seen you appear on any sourcing systems.
So part of that whole trying to make ourselves a bit of a bigger brand, we have recently added ourselves onto a few, but Trigold isn't one of them as of yet, I'm afraid to say. 27 Tech was the most recent one for us, so I know from a compliance point of view it makes it a little bit easier to use it via those guys. We are also on the LNG Club version as well directly, so that's another option there. So, but right now, Trigold, I'm afraid to say we're not just yet. So.
Okay, but you are on Commercial Quote, which is Specialist Hub's.
That's correct as well, of course. Yes.
Quoting system, where it doesn't take 20 minutes to actually get an answer. It takes about 90 seconds. Okay, that's all the questions we got, Graham. Thank you so much. Simon will remove you from the room. Don't click any buttons that...
All right. Thanks again, Tony.
Close down. Thanks again. We'll see you soon. Thank
you.
All
the best. Cheers.
Oh, Pierre just said, which sourcing system did you say you use, as I'm in a noisy cafe? He said 27 Tech. So... there you go, Pierre. Right, okay, so we are at 11:08. What we'll do then is if we come back at 11:20, and I'll just change the slides so we've got that on there. And so it's time for a comfort break or a different type of break. And we'll see you shortly. Stay with us. Welcome back, everybody. Hope you enjoyed your break. Okay, we will crack on. I know our next speaker's in the room, but she's not showing as a presenter as yet. So she is. She's just gone as a presenter, so she'll be with us any second. So our next speaker is Stacey Woods from Selina Finance, and you should have received this morning on your email, the Selina product guide. A little bit about Stacey. I'll talk very slowly because she's still not appeared as yet. There she goes. Stacey, can you hear us?
Yes, I can hear you. Sorry about that.
Don't worry about a thing. How are you? Okay.
Yes, I'm good, thanks. Hi, Tony. Hope you're okay.
Yeah, all good. Stacey's been in financial services for the last 12 years, initially working in the post room for Blemain Finance, now known as Together. Her career has seen her grow from here, joining Selina Finance in 2021 as a key account manager, where she was responsible for looking after brokers all over the country. Today, she is head of sales at the company. Her role at Selina is to grow and maintain strong relationships within her broker network, keeping them up to speed with their product range. Selina brings something new and exciting to the second charge market, which Stacey can't wait to tell you all about it. Beyond Stacey's career, her greatest joy is being a devoted mother to her 2 teenage daughters. Family has always been at the core of her life, having married her childhood sweetheart 5 years ago and spending the last 21 years creating a wonderful family life together. Stacey is a massive supporter of Manchester City and loves spending her time following the team all over the world. There's a bit of a Manchester thing going on with the speakers so far by the look of things. And again, I was trying to find a picture. Her claim to fame: when Stacey was little, she met the full Manchester City team and had lunch with Francis Lee, the Man City manager at the time. Now, what she can remember of Francis Lee is probably a lot different to me, because I'm old enough to remember that he did like a punch-up. He really did. And there's him back to the lane one on Norman Hunter, I believe that is.
I was only a toddler at the time. I was told this story by my dad. But yeah, it is very true. But I don't really remember much of it, to be honest, Tony. But it's the only claim to fame I could think of.
Yeah, he's not only was he a very good footballer, also a very brave man to take on Norman Hunter, who was probably about as hard as they came. So, right. Anyway, yeah. Okay. So I'll see you in about 20 minutes, Stacey. It's all over to you. Good luck.
Thank you very much, Tony. Thank you for having me here today. So we're just going to cover a little bit about Selina Finance and what it is we do. And we are a little bit different to some of the other second charge lenders that you will hear about. So I'm just going to try and strip it back to basics, give you a bit of an overview of how we're changing, how we're evolving, and a little bit about how we package and what we expect from your customers. So product terms at a glance. So our starting rate is currently, oh God, I remember the first time I did this presentation, our rates was about 3.95. Gone are those days for second charges with those rates. But yeah, 7.8 our rates are starting from currently, and a maximum LTV of 85%. We've just increased our loan sizes back up to 250k. So we do see a lot of larger loan sizes due to the nature of our product at Selina. We've got fixed or variable rate options. We've just tweaked our criteria and allowing a little bit more adverse as well, which we'll go into a little bit later. And we'll do maximum 30-year term. We do have a very flexible AVM criteria as well, which we will go into a little bit more detail. Something we pride ourselves in at Selina is our turnaround time and our service levels currently. You will submit a pack to Selina and 100%, obviously not, well, maybe 99.9%, you'll get an update in 4 hours. We're completely digital end-to-end at the moment at Selina. So we've kind of evolved and wanted to be a bit of a fintech lender from when we very first started. So we have electronic mortgage deeds. We have no consolidation form, no application form. And we don't even have a direct debit mandate. We do all of that internally. So we have a lot of same day offers. I think this week we've had, with the same broker, we had 4 day one offers, which allowed us to fund the case within 24 hours. So if your client is looking for speed of completion, absolutely Selina's definitely somewhere you would consider. LTI, now we will look at up to 6.5. It used to be on a referral, but we now take up to 6.5 standard. Product fees slightly changed a little bit. So we do now have 2 separate product fees for the status 0 and the status 1. Status 0 being 995, status 1 being 1195. We talk about the HELOC and a 5-year fixed, which we'll touch on just a little bit later. Our AVM criteria, again, very, very flexible. We allow AVMs, which is your desktop valuation, your home track, which is much easier than having your client go and do a drive-by or paying out for a RICS on a lot of our cases. So we're trying to be quite flexible and digital. Lots of different funding purposes at Selina. So life, school fees. We do a lot of clients that, especially in the south, that have private schools and need school fees, and they can, you know, rack up quite hefty bills. So if we can spread it out over a longer term, really helps them. Home improvements and property renovations is definitely our number one at Selina. And we do obviously do the standard debt consolidation stuff, business purposes, tax bills. We have clients that are property developers that will purchase buy-to-lets at auction. They might not even have a property in mind that they want to purchase at the time, and we can borrow the funds for them until they purchase the property at auction. Like I say, they don't even need a specific property. We can just assess them day one on their affordability, and we'll go from there. So the HELOC. This is probably the most exciting bit. I know Tony likes the HELOC. We've done quite a few of them of late, where they've been really good success stories, especially with the guys at Specialist Hub. So HELOC, it stands for Home Equity Line of Credit. They're massive in Canada and America. It's a bit like it's a bit like an overdraft, or maybe even a credit card in the UK. How popular they are. So a lot of people that have wealth within their homes, they might be quite low LTV. They have access to cash whenever they need it for whatever purpose. So we do your standard term loan at Selina, so you can borrow the funds for debt consolidation, pay off your creditors and start your term loan just like any other second charge lender. But you can also have the HELOC option, which is a little bit more flexible for your home renovation clients, especially your larger loan sizes anyway. How it works. So this client here, he's taken 75,000 on a HELOC. Year one, he only needs 40,000. He's just getting his kitchen done in the first year. In the second year, he's borrowing another 9,000. He might be using that for his garden. And in the third year, and so on and so on. And as you can see, the balance that he's drawing down is more and more every year as he gets to his fifth and final year. So year one, he's only paying interest on that 40,000 that he's borrowed. In year two, he's only paying interest on the extra 9,000. So as you can see, it just goes up in stages. But what will happen when you get to your fifth and final year? Because the flexible period is only for the 5 years. So you get to your 5-year period, you might not have even borrowed the full 75,000 that you requested in the first place. You'll be locked in then to however much you've borrowed. So this client here, he's taken 60,000. That's all he needs to borrow. That's fine with us. You will then continue your 60,000 over the remaining term of the loan. So if you did take it over 25 years, then the rest of that is spread over the 25 years. The beauty of it is you can draw it down and pay it back, draw it down and pay it back in stages. So if your client wanted to, in year 3, they got a massive bonus from work, which happens from time to time, and they might want to pay off 20,000. That 20,000 then will become back available for them to draw down if they needed. So it's a really, really great product, like I say, especially for home improvements, property developers, that type of client. But again, you've got the equity within your home. Anybody can do it. So yeah, that's where we're a little bit different to some of the other second charge lenders that you will speak to these days. So we're just going to cover off a little bit now in terms of our criteria and what we expect. So we look at employed criteria, self-employed, and we do contractors, sole traders, limited companies. So just a bit of what we require in terms of packaging your case and what we expect. So employed, so 3 months pay slips. We would need 2 years P60 if we're using any additional income. So something that we've most recently tweaked is we can use 100% of bonus, overtime and commission. Providing you've had that for the last 2 years, we can use up to 100% of it. So before, we would only take 50% of any bonus, overtime and commission. As long as you've had it for 2 years, we're happy to take it all at Selina. So that's something that we've recently changed. Second jobs are considered, providing the hours are sustainable. So you will see some doctors that are also locum doctors, or things like that. They're working additional bank hours. They have to be sustainable. We can't have 2 people working 100 hours a week on each job. Again, just hypothetically speaking. Full salary accepted. while you're on maternity leave. This is something that's quite good. I know you probably don't come across too many, but it is a nice little niche that we have compared to some of the other lenders that are in our space. If your clients are on maternity leave and they can prove that when they go back to work, they'll get a letter stating the salary and the hours that they're going to return on and when they're returning to work, even if it's in 6 months' time, we can use the full back to work salary, providing, like I say, you've got the letter and the previous pay slip from when they finished on when they went on to maternity. LTI is something that's just recently changed. We can now go up to 6.5 on LTI. And I suppose another exciting one, probation. Clients in probation. You might be 1 month in your current job, providing you've got 12 months job history in the same line of work. So I might have previously worked for Pepper and I've come to work for Selina. I've been here a month. Happy days. We're all right with that, providing we've got 1 month's pay slips in all circumstances. Perfect. Limited company. So we do see a lot of self-employed clients at Selina. Limited companies especially, we always need an accountant certificate. Anybody that is greater ownership than 25% would always be deemed as self-employed. We always need the accountant certificate for completing in full with a projection. If you've got that projection, and we wouldn't need bank statements if it was older than the last 9 months. So we'll try our hardest not to ask for bank statements at Selina. We know that brokers absolutely hate them, and I can understand why. It can kick cases out of bed at the last minute. So we're not a lender typically that asks for bank statements. We've actually run some data in the past few months, and I think it's something like 7% of all of our cases we've needed bank statements. So that's pretty good. We can use dividend income. Even if you have got, we can take from retained income. If you can get the cash position on your accountant certificate, you can get the accountant to provide that. We can use some retained dividends. If you've not taken all of the dividends, we can take some of that as well. But obviously we'd need that cash position showing on the accountant certificate. You would always need to be in employment, in self-employed for 2 years minimum in order to qualify on the self-employed accountant certificate. Yeah, perfect. Sole traders, you can be 1 year sole trader. It's really straightforward this. Latest SA302s and tax year overviews. Again, 3 month business bank statements will be required if the SA302 is older than 9 months. If they're not, happy days, we don't need any bank statements. Pretty straightforward in terms of how we sit with the other lenders really with this sort of stuff. Just to touch on that, I know it doesn't cover it on the slides. We do look at contractors. We get a lot of day rate contractors. We would multiply the day rate times 46 weeks. You can be a day one contractor, so first time contractors, absolutely fine with that. What I will state is that you would always need the amount of hours stated on the contract, because we do get some contracts that don't state hours. The company are not willing to provide it. We would assume then that it was 0 hours, so we wouldn't be able to do that. So we just need to make sure that that's covered off. But yeah, we do a lot of contractors at Selina. Adverse criteria. So this is something that's quite recently changed at Selina. So status 0, we would not allow any missed payments on mortgages across the board on status 1 or status 0. We are looking for a pretty clean client in terms of secured arrears. We wouldn't allow mortgage arrears. On other arrears, so your loans, credit cards, things like that, we would allow 2 missed payments in the last 12 months on unlimited items of credit. So even if that's 10 items of credit, they could have gone 2 down in the last 12 months. We would consider it on your status 0, excluding any mail order, communications, or utilities. On your status 1, we can ignore any credit if they're being we can ignore if they're being consolidated. So we can ignore conduct completely if they're being consolidated with your Selina loan. So we've made a bit of an improvement there. So previously it'd be one status 1 on your status 0 as 1 missed payment. Now we can allow unlimited, providing we're bringing it all up to date. So you could have missed at least 2 on your most recent, and we'll be fine with that. We wouldn't take any clients that have got any payday loans, bankruptcies, IVAs, debt management plans. We can clear debt management plans. However, they must have been in place for at least 12 months and not missed any payments on those. And the amount outstanding on the debt management plan cannot exceed £5,000. Unfortunately, we don't really see a lot of those, but just to touch on our adverse criteria and how we're trying to be a little bit more flexible with that. So our valuation matrix. So like I said, a lot of our clients come to us for big home renovations, property purchases, things like that. Generally quite low LTV, but our matrix and our criteria for lending is quite flexible in terms of when we require a valuation. Properties that are up to 500,000, and we can go home track, which is your desktop valuation, which is very, very, very low cost, would be up to 85%. On properties up to 500,000, properties up to £1 million, up to 80%, and properties over £1 million, 75%, if you've got a confidence level of 6. So the confidence level is what's important here. So if you get a 5.8, for example, that would still qualify, but we would need to use the lower end of the range on your home track. So you get a little bit of wiggle room there to play with on your scores, on the confidence levels. So if you was at 5.9, for example, on a property that was over £1 million, you're still fine up to 75%. You just need to use a lower end of the range. Sometimes it'll work, sometimes it won't. We do offer the options for drive-bys in some scenarios as well, which can work out a lot cheaper, to be fair. So yeah, we've covered off valuations and valuation matrix and how that works. We can lend to owner-occupier, and we would lend on a second home. We don't lend on buy-to-lets. So you can be living in a property at the moment. What we also do is with a lot of these clients that are wanting home renovations, they can have moved out, living somewhere else, living with a family member, or even renting somewhere else, for example. And if they're renovating their main property, we can still lend on that. And we can lend on a second home. They might live in London and commute to Manchester for work and have a second house there, providing they're not renting out and there's no commercial element to it, then we're fine to do that. We lend in England, Wales and mainland Scotland, and second charges are our only option at the moment. We did at one point look at first charges, but that's just off the table for now. If it does come back, I'll be quick to update you all. Properties under renovation, one thing I will say is we'll always require photographs day one. So before we'd ask you to go away and get a valuation, because we do touch ones where they've got no working kitchen and bathroom, like I say, if they've moved in with a family member and currently out of service, the kitchen and bathroom, we would still consider that. We do a lot of those. We just need to make sure they're at a second fix stage is what we call it. So basically all the walls and the electrics are in. So the key thing here is photos of internally and externally of the property, and we'll go from there. We'll give you a good idea whether we're going to go ahead with it before, to save you that time and cost of getting the valuation done. So yeah, we've touched on this. I'm a bit ahead of my slides, to be honest. I do this all the time. We would always request submission photos just to make sure it's low risk and we don't want to add any cost to you guys. Why Selina? Speed and service, definitely. We've made lots and lots of changes in the last few weeks. Sorry. Hang on a sec. Someone's messing about with my slides. So we've made lots of changes internally. We've just added. We used to just have a London office. We've now got a Manchester office where all our underwriting team are. Cases can be processed within 4 hours. Digital end-to-end journey. Mortgage deeds or electrical. We don't have any application form or consolidation form, complete paperless. And like I say, great AVMs. So things have kind of gone a long way in the last 3 years since we very first started. But yeah, that's it from me. Thank you, guys.
Well done, Stacey. Brilliant. I've always said every time Stacey's presented on these, there's been very few times that in all the years I've been in second charges that I've gone, wow, that's a game changer. It's only actually happened 3 times. And the third time was Selina. It really was a product, the HELOC product, which I've been asking lenders for years. So it just made so much sense. You've got somebody who's got putting their kids through a private school. Do they want to draw all the money on day one? Of course they don't. They want to be able to draw it over a certain period of time and only pay interest over that certain on each drawn tranche. So to me, it was a no-brainer. And then Selina came out of it, and all my prayers were answered. So it's a fabulous product. It really is, and we've used it, as Stacey said, we've used it over and over and over again in the last 3 years. So yeah, great product. So approach all delegates, approach all local private schools and say you have a solution for their clients. You wouldn't believe how many parents with their kids at private school are struggling to find the fees. It really is quite mind-blowing. Not everyone is absolutely loaded and can afford it. Quite simply, at times there really is parents do have a problem in actually raising the term fees for their child. So
we do have a lot of clients as well. If you think of the drawdown option, when our rates was 3.95, we still have a lot of clients that come to us that have not yet drawn all their funds, and they have money available at 3.95. Imagine you as one of them, Tony. I wish it was me.
Yep, absolutely. So we go on to the questions. You've not had any questions from the delegates, which means you must have covered everything. You've already covered the typical turnaround time for a Selina customer. It's about as quick as it gets in second charges, to be honest, because they've done it the sensible way. They've not done it. It's because they're a new lender to the market. They've got no sort of like historic ideas of how a second charge should work. So it really is very, very quick. You may have covered this. I missed the first 10 minutes, unfortunately. Are there any further affordability assessments on the HELOC product if the clients draw down at a later date, such as 4 years into the facility?
No, we didn't touch on this. No, absolutely not. You would literally just email myloan@Selina Finance for a further drawdown. There's no further affordability checks. We do everything day one. We do your credit check, assessment. So yeah, no, absolutely not.
Okay, that's the only question we've got. Apologies for those slides changing at the end. That was me thinking I had my mouse in my hand. I didn't have my presentation clicker.
All right.
I'm thinking, why isn't this working? I'll get, honestly. Stacey, thank you so much. I know you've been rushed off your feet this morning, so thank you for your time. We'll see you very, very soon.
Thanks, guys.
Good work. Simon will remove you from the room, and we will go on to the final speaker, which is coming up any time now. Hopefully he will appear, and so will the slides. No, he's not there. Hopefully the slides will appear any second now. Wonders of technology. I promise not to sing a song. There we go. Right, okay, so our last speaker is my old friend Tony Grillo from Together, who I've known for many, many years, lives locally to me. Again, like I said with Gary earlier on, one of the nicest guys in the business, but really does make a difference because he's been doing it as long as he has. He does know his stuff. As you're probably all aware, Together now have a very restricted panel. They haven't gone out since after COVID. They didn't go back to the entire market like they had before, and they're actually doubled their profits, which just goes to show, well, basically it's something that works for them. We're lucky to be one of their chosen partners, and long may it continue. You should have received this today regarding their commercial finance product guide, which was dated 24th of May. So some recent changes and some positive changes from what I remember as well. Yes, it was loan size increase for commercial term mortgages. So a little bit about Tony. He's worked in the specialist lending industry for over 20 years. In this time, he has undertaken a variety of roles from underwriting to internal sales, through to his current position as business development. This is why I speak slower, because Tony's not appeared yet. Tony has a broad range of experience and knowledge given the time he has spent working for lenders, packagers and brokers. This has allowed him to provide his introducers with both product and market assistance. I don't know what it is today about the football. So we've had Man United, Man City, and now we've gone all the way down to the mighty Watford. So there you go. Tony is a Watford FC season ticket holder. And in his words, someone has to be. And in his spare time, he enjoys watching them play and spending time with his wife and 2 children, who I believe both are now teenagers, and maybe that may change fairly soon. I'm trying to see. I just want to make sure he's actually in. He doesn't even appear to be in the presentation at all at the moment. No, he's not in at all. So this is one where I might have to sing. Hopefully not. And we need him to appear as quickly as possible. His claim to fame, and again, sorry about the pictures, but I was really bored yesterday afternoon. Tony has recently qualified as a narrowboat helmsman. Because he didn't mention anything about a famous person, I just thought, well, I actually thought the last time he presented, when I think of somebody on a boat, I think of Captain Birdseye, unfortunately. So maybe I just like fish fingers. He is he in the room? Is he not? He is. He's in the room, and he's going to appear any second. I'll leave this slide up because I know he likes it. And I'm hoping that that's the only problem we've had all day. I'm hoping any second he's going to appear in the box. Technology. Oh, no, he's disappeared from the room again. So not sure what's happened there. He's back in the room. And there he is. Bearded.
Hey.
Blimey.
I'm trying to look like the picture.
Really? Yeah.
Yes.
Where's your parrot?
In the front.
Right. We will crack on because you just lost me 2 minutes, unfortunately. So we'll crack on. Loving the beard, by the way.
Thank you.
And I'll see you in about 20 minutes-ish.
Cool. Good morning, guys. I was going to say afternoon, guys, but I know I'm a little bit earlier, so it's good morning, guys. As Tony's probably mentioned, I'm Tony Grillo from Together. I'm here to talk to you today about our commercial term offering, the USPs, how to use it, what we're good at, what we're not so good at, and just give you an overview of where Together may be able to help you with your commercial term clients. Little bit about just general USPs or general product criteria. So our commercial term product offering allows up to 65% loan to value on a purchase, 60% on a refinance. We can lend from loans as small as 50,000 up to 1.5 million before referral. So we can go above 1.5 million. We can go significantly above 1.5 million. Our rates are at, we have a 5-year fix, which is really the main product we use at 9.99%. We're kind of very much in that probably 50 to 150,000 pound starter market, because there are really very few lenders that operate in that market. So we kind of, that's our own little market there. We do loans, mini loans larger than that, but the real niche stuff down there is of those sort of loan sizes. That's where we sort of really thrive, as it were. We can lend to clients from 18 years up to age 80, or no max age if it's self-funding. We can have up to 4 applicants, and we can allow up to 3 demerit marks, adverse marks, CCJs, defaults, or mortgages, any combination of 3 of those as to a maximum. And we can do 100% funding with additional assets if they're thrown in. What I probably missed is a little bit about the business. I sort of jumped in, coming in a bit early and being off the cuff a little bit about Together. I'm sure you guys know a lot about Together already, but we've been lending actually 50 years now. We're in our 50th year of lending. We've got a loan book currently of around £7 billion, so a significant loan book across many products. I mean, we do a little bit of everything from regulated first and seconds to consumer buy-to-let, reg unreg bridging, home and business, and commercial term, what we're talking about today. So we've got a significant loan book, 700 odd staff. We're a huge business. But what I want to do is, over and above the main sort of framework of giving you there of loan sizes, LTVs, is to give you why you would come Together, why the guys, Tony and his team, come to us, what types of deals, what types of clients, what types of assets are we lending on in the commercial market. So we have a common sense approach to lending now. I know people will laugh at that and say there is no common sense in lending. We do try and genuinely apply a little bit of a common sense magic wand to deals. We are very different than most, if not all, other lenders out there in the way that we interpret things, in the way that we look at things, in the way that we try and structure a deal. We're there to, the guys, I often speak to Tony and his team about a case, and it will come in looking in one shape and it will come out the other end looking slightly different, because we've had to craft the deal to get it over the line, because the types of cases we often get are not simple, straightforward deals. If they're simple and straightforward, they will quite often go to other lenders. But we look at 3 key areas when we're talking about cases, and that's client income and property types. They're the sort of the USP. They're the areas where we're able to really thrive. So kicking off with client. So as I mentioned earlier, we can lend for clients that are 18 years and above. So many other lenders will want the clients to be a little bit older than that. So quite often get phone calls from brokers. Oh, I've got this client, but they're only 18 or 19 or 20 years old. So, fine with us. We're good. 18 years plus, no 21 or anything like that. So we're very good for that. We do a lot of business for expats and even more so for non-UK nationals. So, and that links into the next point I was going to mention, first-time buyers and first-time landlords. Now, in theory, we can do a £50,000 loan for a first-time buyer, first-time landlord that is non-UK resident. So in that respect, there are few, if any, lenders that would want to lend at that level. So, £50,000, first-time buyer, first-time landlord, living in anywhere in the world. I've had a few clients in inquiries for Nigerian-based clients at the moment, and subject to us getting comfortable with the additional due diligence that we would always do on high-risk countries. That could be any high-risk country. We probably draw the line at Russia at the moment, or sanctioned countries, and I think Russia will sit under those at the moment. But your sanctioned countries, we're going to have a bit of an issue. Having said that, we have agreed to lend to a Russian client recently, but they have been UK resident for 15, 20 years, have cleansed themselves of any relations or connections to Russia, or hold British passports, and all of their money can be traced back to the UK. Nothing is traced back to Russia. So we were even able to get comfort with a client that technically, on paper, we wouldn't be able to help. And that's one of the many great things about Together is we can make these decisions. We can look at a client because we fund through our own sources. We're not necessarily tied to to funding lines and various people above us. We can make our own decisions on deals if it makes sense, and that's the important. If the deal makes sense, and we can sort of clear all the strange and weird and wonderful things around it. If we can make sense of a deal, we'll look to fund it. And when we say we'll fund something, we will aim to do that. We're not one of these lenders that will say day one, oh yeah, we'll do that, and then 2 days or a day before funding said actually we changed our mind on it. If we've made a decision on it, I'll do a rigorous referral day one on these cases for Tony and his team to make sure that we can do it. We'll get any additional compliance, any additional KYC that we need for non-UK nationals, or if it's a quirky asset, we'll try and get a lot of that cleared out the way day one to make that deal happen. 18 years old, no maximum age if they're self-funding, 80 if it isn't self-funding. We'll lend to expats, non-UK nationals, first-time buyer, first-time landlord. Moving into income, if that will allow me to. Oh, sorry. So income-wise, so we don't really require any track record of self-employed history. We officially say we want 12 months self-employment history. However, we can potentially work off a projection. If we can get a solid projection from an accountant, we can almost work off a projection day one for a self-employed client. I've had a scenario actually this week. Clients are looking to set up an equestrian centre. First, on their own, so they will have zero self-employed track record, shall we say. However, they've been working in equestrian circles for years and years and years. They've got a lovely black book of clients that will be coming to them. They've already got some expressing interest. They're able to put together a business plan and get something from their accountant. The accountant's happy to sign, to show us a business plan, to show us what the projected income is likely to look like. And we're able to gain some comfort around that and actually potentially use that income. So, again, few, if any, lenders are going to take that sort of pragmatic approach and sort of try and make a deal work. We're affordability driven. If we're using clients' own income, if it's not self-funding, we will work off their total net income position. Now, I always say to all of my introducers, but Tony and his team, I don't want to see accounts. We don't review accounts. Not interested in looking at those. I'm not trained to look at them. I can read them, I can understand them, but we don't accept them as a proof of income. What we would want from a self-employed client is our accountant certificate. It gives a very clear and simple indication of what the client's net income position is. It's the easiest way to determine what a client's income looks at. So it's a fairly straightforward, send it to the accountant, get it to fill it in, send it back to to Tony or to you, and then to Tony and to they'll send it to us, and our underwriters will review and use that income. Easiest way to show what their income is. We are able to effectively top slice on commercial term, i.e. use their own personal income. We don't really have any major stipulations on that. It's our TSDI calculation, total secured to debt to income calculation. So we can effectively use a proportion of the client's own income on that to support the affordability of a commercial deal. With the equestrian one I mentioned earlier, had we not have been able to use the self-employed income day one with a projection, the client's husband was going to continue full-time work. They were going to live on the site initially, and we would be able to use his own personal income to satisfy our TSDI calculation there. So effectively using an outside income to satisfy this commercial. It's slightly different because the clients were moving out of their home into a caravan on site whilst they built the business up, but we were able to use his income to support the borrowing. So it was really, really flexible there. If we're using projected income, we can use up to 90% of that. We can use also 90% of projected rental income. So if the property isn't currently tenanted, if we can get an estate agent appraisal of what that income is going to look like, then we can use 90% of that projected income. If a holiday let property falls in the commercial side, it might be that it's got holiday let only restrictions that would then come out of our buy to let products that it may normally sit in and fall into our commercial term. We can use between 50 and 80% of the holiday let income, depending on how long they've owned the property. If they can evidence it, we can use 80%. If it's a projection, we can only use 50% of that. But we're quite flexible in terms of holiday let type scenarios. And we're happy to do owner occupied and investment. So we'll look at all types of deal there on that basis. And this is an example of our accountant certificate. This is actually the old one. It's been slightly updated. I didn't get a chance to show, but it hasn't changed significantly. But the general content of it is there or thereabouts. Very, very simple information that the accountant shouldn't have any problems providing. Having said that, I've seen many filled in wrong by qualified accountants, which always makes me chuckle, but hey, that is what it is. But it's very, very simple information there. And so we can look at the projection if you see on the left-hand side, on the left-hand column there. And property types. We will look at all types of properties. It's one of the things we've become really well known for over the years. Not only do we look at we're a lender known for doing a lot, able to do adverse business, which we still do. We still do it very well, but it's not necessarily our lead jump into the market. It's more the income and the types of security that we we really play on now. We will consider most asset types. You can see from some of the examples on there, land. We're one of the only lenders that will lend on land with or without planning. We can do a bridge on that. We can do term on it. If somebody's got what I'll refer to crudely as a slab of mud and they allow people to park on it and it generates an income and they can document that income, we will lend on that land because it's generating an income. We could lend technically on a single garage if it's on its own title. Someone that's just renting out a garage on their road to people to park in during the week when they go to work to jump on the train or whatever. So that type of land with or without planning, a garage, really quirky with this equestrian. I'll keep referring back to this equestrian one, but it's the gift that keeps giving because it's got so many little quirks to it. All this is at the moment is grass. They're going to put some stables on it and a caravan to live on. But effectively, we will lend on that as it stands as a piece of land. We will take into account, obviously, the fact that it's being used for commercial purposes, but we will lend on it. Non-standard constructions, properties that are concrete, timber framed, anything. It more refers into the buy-to-let market, but high-rise flats, ex-local, all of those types of things. But really, any type of assets, stables, barns, warehouses. We're just completing on a completely empty warehouse for a builder. He's looking to buy the warehouse to store his building equipment and supplies in. At the moment, it's brand new. It's not fitted out at all. It is just a metal shed, essentially. But we're happy to lend on it. And I think we've gone to about 65% on that one. We were quite happy, even though it's empty. The guy's putting in some mezzanine flooring at his own cost. He's putting in some office space in there. So the asset's only actually going to get better as time goes by. But many other lenders would run a mile from it. But we were able to get comfortable with that. Properties with land. Again, some of the pictures on there depict, we're quite happy to lend on farmland, properties with farmland, property with large swathes of land attached to it, subject to valuer's comments, and we'll always say that it's always going to be subject to valuer's comments. But we can lend on all of those types of assets. Pubs, restaurants, hotels, B&Bs. We're doing quite a lot on the social housing side at the moment now. Care homes, nursing homes, they will fall under our commercial term remit. We're quite happy to do those. We're doing a lot of business on social housing for asylum seekers. I think the government-run contracts that are run by Serco, Mears, and one other. We're seeing a lot of business on the back of those. So those types of assets, children's homes, care homes, as I've mentioned. And again, as I mentioned earlier on, we can cross-charge against one or more assets. We can technically 100% fund on cases, and we quite regularly do that. And that really is the three main key points. So a little bit of research we've done, which growth areas in the next 12 months, bridging, second charge, remortgaging, buy-to-let, all of these commercial, you may need a commercial term exit for a commercial bridge, or all of these. This is where often exiting bridges could be tricky. We're happy to exit a bridge. We'll do a day one remortgage. If they've only owned the property for a short period of time, we're quite happy, subject to just making sure everything stacks up to rebridge very quickly. To put the clients on a term. Quite often to be honest with you, clients coming to me for a commercial bridge, and we're like, well, why aren't we doing this on a term? I can't see any reason why we wouldn't do this on a term. And they'll turn around and we'll say it's speed. Again, being completely honest, we can complete on a bridge. We complete on a commercial term as quickly as we can complete on a bridge in some cases. So why would we want to put the clients through the pain and additional expense of doing a bridge when we can go straight to term? It might be that they can get a better rate than our rate on the exit, and okay, we'll look at doing a bridge. But if they're not, if they're going to end up to potentially be a together type client, well, let's just get them on a term day one, quicker and easier for everyone, and so we'll save the client significant money. Skip through these, but we have our own internal funding, so we can do things through our internal solicitors, which can speed up things. We can't unfortunately do AVMs on commercial. It's the only product that we don't do AVMs on desktop valuations, but we would always require a full valuation. But we're very quick. We're known for our speed, which is really, gives us a real jump sometimes on a case. We might not always be the best on rate, but actually in terms of speed and certainty of delivery of the funds, that's where we really win business. So in summary, speed and service, as I've just mentioned, flexibility. We'll take a view. Say the amount of times I've had conversations with Tony and his team and all of my introducers where we just, look, I've got this deal, don't think we're going to be able to do it. However, let's have a chat, let's get some further information, let's see where we can go. And the certainty of funds. Our funds are our funds. We decide where we go or what we do with that money. We're not having to go to various external credit committees to get decisions. It's an internal decision. If we like it, we'll do it. Thank you. And questions? Thank you, Tony. Before we get to the questions, I'm only doing this because I'll forget otherwise. We're going to go on to the next slide, which is this one. So, Tony, I need you to call me out a number, please. These are people that have been on the show pretty much constantly since it started. They've not flitted in and out. So I need you to give me a number, please, between, 1 and 61. 42. 42. We have... Someone just asked a question. We have Neil Patel from Gaudium. I hope I pronounced that right. Gaudium Associates. Well done, Neil. Neil's someone that uses this on a fairly regular basis, and he's just said here. He's seen this before, obviously. I didn't even say you've got to say you're here. He's obviously seen this before. He knows it's cool. So well done, Neil. And we'll then go back to the questions. And Neil Patel asked the question, SIP purchase and development lodges. So SIP, yes. We're fine with SIP. Subject to it's generally 50% of the SIP value we'll lend. We do that on a commercial term or a bridge. So yeah, absolutely. I've had a few inquiries on those recently. Lodge depends. It's a referral. Does it have a title? Does it have holiday let, or it's really going to depend. Refer them into Tony and the team, and Tony can send them in. I can get them referred. We've done them. They're not our favourite type of asset, but they're going to need to have a title. That's probably the.
It's all about building a case, Neil, basically, on something like that. So we can help you do that. Pierre has said, which were 3 social providers you mentioned, please? For example, you mentioned Serco. What were the other 2?
Serco, Mears, and I can't remember the other one. I every time I've got a presentation somewhere. Let me see. While you ask me any other question, let me see if I can find it.
So Zahid has said, what loan to value can you lend on agricultural land, and what's the minimum amount?
So minimum amount, that's the easy one, 50,000. Always across commercial term is always going to be 50 grand. Loan to value wise, I'm going to say 50% generally on those. 50%. So anything land that where let's just say mud or grass or whatever, or a combination of the two, you're going to be 50% of the 90-day value generally. I mean, if there's something nicer about it, something if there's something on the plot, then we might be able to do something a little bit greater on that. But I would say, to be safe, 50%.
Okay. And Neil Patel, again, Neil's been getting very involved today. So it's G4S.
No, it's not. No? No, it isn't that one. No, I can't find it on my computer.
Don't worry. We'll
yeah, I'll let you know, Tony.
Yeah, Pierre, what we'll do is I'll find out and I'll send you an email. It's probably best, so I can let you know if anybody else wants to know.
Let's say the 3 companies, they're standard. They're issued by the government. We're all over them like a rash, to be honest with you, and we actually use the income on the contracts. Many other lenders won't use that. They'll just use the passing rent or AST rent. These rents that Serco, Mears and A&O are paying are probably 2-3 times what you'll earn as a buy-to-let. So hence people are all over it. It does have a slight, maybe 10-20% effect on the valuation potentially. So that's something that the clients need to bear in mind. But yeah, we're seeing a lot of it. It's a real sort of buzz area for us at the moment.
Okay, nice one. Tony, as always, thank you so much. Tony, loving the beard.
Thank you.
Maybe a bit of Grecian 2000 on the chin bit there. I'm a fine one to talk the state of me. But yeah, good to see you, mate. Come and see us soon, as usual. And we're well ahead of time, actually, which is really good for me. So Simon will remove you from the room, and we will now go on to the final part of today's webinar or Specialist Mortgage Web Show, which is going to be me. So what I'm trying to do, I'm glad I actually cut this down because I really am suffering today. So I might have to actually cut this short. I'll see how it goes. If I'm talking, my stomach forgets to remind me that it's here. So I will crack on. Starting off with some news. I did do this as news, I believe, last month regarding us being added to the Interbay Select panel at long last. The reason this is news is that they just launched a 1% cashback on semi-commercial cases, which is very, very useful. So so weirdly, they're still charging the amount up front and then paying it back to the client. I just don't reduce it. I reduce it to 2%, but there we are. But great, if you are using Interbay directly, you won't have access to what we have access to, which is lower rates, higher LTVs, lower minimum loans, and as you can see there, what else have we got? Just basically a better product range. And that's purely because of the volume we've done with Interbay over the years. We was for some years their largest producer for the first 3 or 4 years, I believe. So that's from Interbay, and they've got 83 semi-exclusive products. Just be aware. Castle Trust, Gary's already covered what they have today. I won't cover that too much. The rates from 0.52% per month, and obviously 80% net. And I mentioned that one client that I've got a very happy gym colleague at the moment who's got an offer on a property she thought she was going to lose. So again, semi-exclusive. So any case you get for light or heavy refurb, give us a call because the terms are pretty much the best out there. We have launched an exclusive second charge product. This is now out there, but breaking news, it's now available on buy-to-let properties as well, and is incredibly flexible. I won't go into all of the parts of the flexibility, but give us a call if you get anything that comes up. No one else has got access to this. And if their broker you use does have access to it, it's because they're coming through us. So just be aware of that, and they're taking a chunk of your income. So anything you've got on that basis, give us a call. And a little bit of news on the FCA. This is the only time I'm mentioning the FCA today, pretty much, is that they've decided, this information was gained from a meeting I attended on Monday with one of the trade bodies, that the FCA has shelved their investigation into second charge loans. Since 2018, they have spent millions on this in investigating second charge loans because they thought they were dodgy and they couldn't find anything wrong. So they're now concentrating on later life lending and car finance. So for the second charge market, that's a sigh of relief because they've at long last realised that a second charge is basically a first charge, like a first charge, but a second charge. So great news. And some other news, I thought this was fantastic, in that the Financial Ombudsman Service is now to charge claims management companies and ambulance chasing solicitors a minimum of £75. That's £75 if they win the case, but it's currently £250. Amy and other trade bodies are lobbying for £500. So those claims management companies that have just basically thrown mud at the wall when it comes to the Ombudsman, hoping that some of it will stick. Well, if they do that, potentially it's going to cost them £500 a time. This will start, I'm told, next year. It can't come soon enough. We don't have problems with claims management companies anymore. We did whilst the PPP saga was going on. We was being accused of selling PPP to clients that we'd never even heard of. Selling PPP, my favourite was selling PPP, or PPI as it's also known, to a client that took a bridging loan with no repayments. But according to the claims management company, we sold in payment protection insurance. Figure that one out. So I'm really pleased that started. Hopefully that will see a reduction in the amount of ridiculous claims that us brokers have made against us that are pretty much driven by these companies and not the clients. So I'm very pleased with that news anyway. So our next Sutton the Specialist coming up is on the 23rd of July, which is maximising value for your clients. And that's 60 minutes with Josh Knight, Sales and Marketing Director of Octane Capital. I've seen the basically what this is going to be about. I think this is one that says not to be missed. I'm glad I'm going to be actually co-presenting because I wouldn't want to miss it because there's going to be some really, really useful stuff in it. Josh really does know his stuff. So sign up to that one. That's available now on the website. Okay, so I'm going to talk a little bit about specialist stuff. I might have to shoot through this and actually go past a few pages, depending on what's going on elsewhere. But a little bit about us. Basically, how we deal with you: either packaged, you offer the advice, or introduced only, we offer the advice. Quite simply, that in a nutshell, that's it. And you can pick and choose cases. If you want to package some cases, not package others, entirely up to you. That's your choice. But we offer both of those. As long as you have the permissions in place, we can offer that. Why are we different? It's not the products we offer, because we offer the same as everybody else. It's our lender relationships. And many of you would have heard the one scenario that I'm going to use in a little while, the Together scenario, in that, I mean, my relationships with Castle Trust go to, I'm very good friends with the managing director, very, very good friends with the sales and marketing director. I'm very good friends with the managing director of Lendco. I'm very good friends with directors at Together. What more can I say? And that means, and that makes such a difference. I can't tell you how much of a difference that makes. Any of you that have got contacts in high places at lenders know that from time to time they can prove absolutely invaluable to you in getting cases through, because one of the biggest problems we have as brokers is just trying to get that case past an underwriter that might just be having a bad day and just decide, no, I'm not doing that one for whatever reason. And then being able to speak to somebody and put the case to them directly can make the world of difference. The other reason why we're different is the people we employ. My staff have a minimum of 5 years experience. For those of you that deal with us on a regular basis, two of my staff, Joe has now been in the market for 29 years, and Kirsty has been in the market for, so I have to do the maths in my head, 27 years. And there's not anything they don't know about the job they're doing, believe me. So that is absolutely key. No one gets in the door for an interview unless they've got 5 years experience. Mature life experience, that is an absolute must. You don't want to be speaking to somebody that's like 21 years old and that doesn't know what they're talking about. It's pretty much making up as they go along. And we do come across those at lenders on a very frequent basis. We don't employ people just to fill seats. I employ people because they're there to do a job and do it well and give you the best service possible. And on the rare occasion, we're not 100% perfect. Rare occasion, something does go wrong. They recognise it early because they've got the experience and they have the experience to deal with it. That's why we don't get complaints. And we all know how difficult clients can be at times. I've heard one of my staff have a conversation with a client this morning who wasn't happy that the rate had changed since January when he first applied. And she was able to deal with that in a very professional manner. Basically, he was just being a bit of a dick more than anything else. But it was a difficult situation. That sort of thing can turn into a complaint. We've now got a happy client who's proceeding. The other reason we're different is not our numerous awards from the financial press. We haven't got any at all. I'll be honest with you, and we never will have. I haven't got an ego the size of Luxembourg that I have to win awards, and I won't go on Facebook and ask all my Facebook friends to vote for me in some awards too, because I don't want that type of scenario. It's cheating. And I've seen too much. When we vote for lenders, fine. If any of you have won an award, then congratulations. But I've seen too many scenarios where somebody has actually paid for an award. And sometimes they've not even known that they were paying for an award. The best one, I think, my favourite one was I attended an awards do, and the winner of Best Newcomer went to a company that was launching the following day, but had spent £20,000 in pre-booked advertising. How can that happen? Well, it did. And it's too frequent, unfortunately. So, no, if you come into our office, you won't see a cabinet full of awards because I'm just not interested. I'm really not. What else we can offer? One underwriter from start to finish. That, I think, always helps in that you're not being passed from team to team. You're dealing with one person who knows the case inside out. The only time, obviously, holidays is the only time you normally deal with somebody else. Of course, the only other time you will deal with somebody normally is me at the end, because I pay your commission immediately on loan completion if we've got your bank details, which we always ask for, because so many times in the past someone has changed their bank account, not told us. So we just ask for your up-to-date bank details. And we don't have any commission clawbacks either. So if it does, for whatever reason, I can't remember the last time we had a clawback, but we would never pass a clawback on to you unless it turns out to be fraud, or unless the client cancels the contract within 14 days, which many lenders now allow. What else could we offer? I mentioned our commercial quote software earlier on. When Lendco were presenting, we also have loan quote and bridge quote. These are our internal quoting systems, and quite simply means that we can quote, if you give us a call, we can get a quote over to you normally within a couple of minutes, quite easily, because the system's set up for speed. And the other thing is it's accurate and it's kept updated as much as possible. And it's normally, if someone does change their rates, we're normally making the changes within 20 minutes. So that's what we have in-house, and it just helps us scour the market for a lot of lenders that don't appear on the sourcing engines. So that's how we conduct our business. Our products regulate basically everything. Just whilst you're reading through those, I'm going to take a quick sip of water. It's pretty much everything except for equity release, which is not a product that I ever really wanted to get involved with, and is under huge amounts of scrutiny at the moment from the regulator. And we've also introduced probate loans fairly recently, which has proven to be very popular as well. A little bit of a case study. I decided this time to have case studies that were from a couple of actually from the sponsor and the prize draw sponsor. So this was Castle Trust, and this was actually, they designed their initial product, their heavy refurb product, to 80% with this client in mind. Because I went to them and explained this client to them. They said, we need a product for this type of borrower. So purchase price of 1.83 million, advance of 1.28, and they subsequently borrowed another 500,000. A really horrible looking property in northwest London, 2 flats under 1 freehold, very tired, nothing happened to it in years. They went down into the basement, they went into the roof, they went out at the back, and they erected a massive garden room as well. The surveyor, and I always have a bit of a problem with this. I mean, surveyors, I know there's a certain amount of research goes in, but there's also so much guesswork goes into this. So surveyor gives a GDV of 3.9 million. The property's on the market for 4.95. He's getting lots of interest, and they've already had offers of 4.75. Now, how can a surveyor give a GDV of 3.9? Well, they did. Our broker partner earned £32,597 from that case, and we dealt with it from start to finish. And it wasn't easy. There were some issues in the middle. It wasn't an easy one, but we was able to get it through, and just over £32,000 for pretty much giving us a name and telephone number, and he had no involvement whatsoever. Next case study, it's the not what you know, it's who you know situation that I mentioned, and this is with Together. So we had a husband and wife business. Mr. was a bit of a naughty boy. He'd not paid any tax or national insurance over for many, many years because he hadn't declared they had any staff. It was only when a member of staff actually made a query to HMRC, they said, sorry, we've got no records of you working for the last 20 years, that they'd done the investigation. He was arrested, sentenced to 5 years in prison. She divorced him, but a Proceeds of Crime Act charge was put against every property they had, including both their children's nurseries and their home and several buy-to-lets. Barclays called in both commercial mortgages, and this was a business that was making 200 grand profit a year and had 300 grand in its current account. So there was actually no problem with the business whatsoever. Northern Rock residential mortgage had expired, and Mrs. was about to lose everything. So came to us, declined by multiple lenders and multiple brokers. I mean, it's one of those that seems to have gone around the industry, unfortunately. So, and it was declined due to reputational risk. Came to my team, so the first thing we did, doesn't seem to have. We contacted Together Money. I clicked the wrong button. Case was declined by their compliance department. The bane of my life, compliance departments at times. I know they have to justify their existence, but sometimes it does get a bit silly. Case was handed to me as a decline because I see all decline cases to see if there's anything that can be done. I thought, well, 50% loan to value, a business this strong. Mrs. was not charged. She was not aware of anything that was going on. He's been sent to prison. They've divorced. There's got to be a deal done here. A 10-minute conversation with a directorate Together, who then approached the compliance department. And it's a bit different when when a director approaches the compliance department than when an underwriter does. Because he went over to him and said, I've got this deal. Why aren't we doing it? Give me one good reason. And they couldn't. Reputational risk is probably what he said. He said, I don't care. This is a deal we should be doing. And he came back 10 minutes later and said, yeah, we'll do this. And we did. And we basically paid off Barclays, paid off Northern Rock, paid off the buy-to-let mortgages they had, paid off all the Proceeds of Crime Act charges that have been issued, introduced rent just under 12 grand, and the client has now gone back onto the high street on the commercial and residential. So basically, and every day, she's still a client of ours, and every time she phones, if ever I pick up the phone, which we've got her programmed into the phone, so I know that she's calling, I'll always try and pick it up, and she still thanks me to this day for what we did. And we're talking probably 2017, 2018 that happened. So again, it's just who you know in this industry sometimes can make such a huge difference because there's so many barriers put in our way to try and get business through. And the directors want to do business. The underwriters and compliance departments are frightened to do business at times. And that's, unfortunately, it's going to be the case. Our feedback, this is a couple of bits of feedback. I tried to get a couple of very recent ones. So this 4th of June, the mortgage application was successful in a week. A very approachable and supportive team. We are really grateful to you, Kirsty, for a smooth process with no tension. And what Chris said was an excellent professional service. Everything I need to know was clearly explained to me with easy to follow instructions of what was required to forward my loan application with a satisfactory outcome, both on Trustpilot. That's the sort of feedback we get on a very regular basis. Unfortunately, not enough of it on Trustpilot. A lot of it's internal. We get emails, for example. But that's the sort of feedback we get. And we've not had a complaint since 2020, which was just a client trying it on, basically. If you want to submit a case, complete our feedback form. When you complete the feedback form, the bottom, the last question says, do you have a case you'd like to place with us? Just put a yes and what type it is, and we'll give you a call. You can, I don't know what's happened to that. You can also complete a decision in principle form we've sent you. There's one for every product. Go to our website, specialisthub.co.uk. You can submit inquiries online, or of course, just pick up the phone and give us a call on the free phone number or the normal landline number. Everything's on the website should you need it. It's also on all of our emails as well. Please follow us on LinkedIn, Specialist Hub on LinkedIn. We're trying to get the numbers up if possible. We're in a bit of a competition with 9 other brokers at the moment. And we're currently anywhere between 5th and 8th in their league table as far as how many people we get on a 30-day rolling basis. If you can follow us on LinkedIn, I would very much appreciate it because I want to get in the top 3 if I possibly can, because it will put a few people's noses out of joint, which would be great. Next Specialist Mortgage Web Show is on the 11th of July. We've got Family Building Society, Interbay talking about their Select product, and Tab, a bridging lender who you may not have heard of, but they've got some very interesting stuff that's coming out, and they are going to be big in the market. They really are. And we have package of status with them, as we have with Family, and obviously we're on the Interbay Select panel as well. And future specialist mortgage web shows, 15th of August, 12th of September, 17th of October, 7th of November. And we've got more Sutton, the specialist, coming up as well, which I think is probably in the next slide. It is Simon Knight, who's the former CEO of GMAC RFC, who's the director at Lendco, who I know very, very well. Anna Lewis, who's a very good friend of mine, I said sales and marketing director, she's commercial director. Hopefully she's not watching, at Castle Trust. And Roger Morris, wherever he may resurface, as long as it's not a broker, if it's a lender, he will be presenting this year. I'm not sure where I haven't asked the question because I wouldn't expect him to answer it. I know he'll resurface somewhere. If you want to, any second now, you will see a little button appear towards the top of the screen. It's a little orange button. It normally takes a few seconds for it to appear. When you click on, don't click on it yet. But when you click on it, that will take you to the feedback page and also any downloads you want. So if you want to download the GDPR compliance documents, our product commission and prop fees guide, or register for any of the shows, you can do. Everything is to hand for you to download. Just do that. But just stay with us a couple of seconds more. We're way ahead of time, by the way. I've just been asked, are you on Atom Bank's panel? I'm pretty sure Atom Bank, I'm trying to think if it was Atom Bank, only deal with networks at the moment, unfortunately. I could be wrong. If I am wrong, I'll find out. But I'm pretty sure Atom was the one that would only deal with networks. Obviously, we're directly authorized. So CPD, I mentioned before, your CPD certificate will be emailed to you by close of business tomorrow. If you don't receive it by close of business tomorrow, check your spam first. 99% of the calls we get is sitting in the spam folder. It's only 1% where there's been some sort of error. I mean, we always get errors on IT, unfortunately. I'm sure everybody does. I wasn't receiving my IT manager's emails this morning for some reason. I've no idea why. I'll probably get them about 3 o'clock this afternoon. But check your spam first, then give us a call. We can get that over to you. So it does take a little while to actually get going. Feedback, please help us out. Also, if you leave us some feedback on Google and Trustpilot, that would be great. I know I'm asking a lot. These are free shows. We've always mentioned earlier on that we've done 94 of these shows now, and this is our 50th Specialist Mortgage Web Show. We've never charged delegates for anything. I wanted to sometimes when 70 people would sign up to a road show and only 10 would turn up, and I had 60 lunches booked. So I was then taking like boxes of sandwiches home and distributing to my kids and grandchildren. But yeah, we've never charged for these, and we don't charge lenders either. That's why we tend to get lenders. It's always difficult if you charge lenders, because if it's not taken into account in their budget at the start of the financial year, then getting people involved is very difficult, and you tend to get poorer quality presenters as well. So we don't charge. These are all funded by ourselves, and I've got pretty much 2 members of staff. Probably 70% of their monthly time is spent on these shows. So please leave us a bit of feedback if you have liked today. Today's sponsor, big thank you once again to Castle Trust Bank for their sponsorship and their support as always. They're a massive part of what we do. And our prize draw sponsor together. Neil, I don't know if I didn't mention actually, someone together will be in contact with you to get that over to you. We don't get involved in that. So that they will be in contact directly. And I'm thinking that's it. And we finished a record 12:27. So still, don't tell anyone, but it's still 3 hours of CPD. Thank you for attending. Enjoy the rest of your day. I hope you join us again soon. Stay safe and stay prosperous, as I always like to say. See you soon. Bye-bye.